Complete adjustment of focus and sound level before the film begins.
Check 1 2. Hell yeah. Hang tight, boys and girls. Ah, shoot. Okay, save that right there. Good morning, everybody. How's everybody doing out there? Change is saved. All right. Go back. All right, hang tight here, everybody. What do I got going on here? I got a lot of stuff going on here. Done. Save. Good morning, Howard. How's everybody doing out there? Y'all doing well? Got a few things I got to do here. All right, hang tight here. Go right into the... Ah, dang it. Hang tight a second here. We need to start talking directly to viewers here. I have to... hang tight 1 second here. Got some weirdness going on here. Not shocking to see some issues this morning here. Not that one. Not that one. Well, that one. Can I get a monitor? All right, that looks like it works. So can I get it? This is another weird one. Cam link 4. Deactivate. Activate. Sweet. All right, we're back. Having some issues this morning. Hang tight for just a second.
White House Economic Advisor Boucher says the U.S. needs to see an increase in labor supply.
The whole pop just deflated. It's kind of weird. My phone is getting probably problems right now. It had to like completely die and reset itself. I just got a text message just now, finally. First time this morning I've had one come through. Got some technical issues this morning. Okay. Good morning, everybody out there. What are we going to do? We got a bunch of stuff we got to do here. This is a 5-minute chart in front of you right now on the S&P 500. Oh, this is a 1-minute chart right now on the S&P 500. Just so you can see right off the bat, this is the hourly trigger right here. It's been very good to buy this, generally speaking, and then to sell to come back down into it, too. We'll talk about that as well on this hourly trigger. Let me take a look back on it here and show you guys. 410.19. 10, 19. It's a fairly good place to buy right on this hourly trigger for the past week or so. Good morning, everybody. Hang tight for just 1 second. I still got a bunch of stuff I got to do here. We got a bunch of technical stuff going, kind of weird. Not just kind of weird. I don't know why it happens, but it just like shit resets itself. All right, newest. I don't know if it's a subscribers, any duration, save, forward. Yeah, I'm having some phone issues going on right now. Hang tight 1 second here. One more thing that I got to do. Spy, ESF. Tesla. Yeah, I posted some stuff about Tesla or Elon Musk over the weekend. We'll talk about that too. It's odd too, as people think that I don't like Elon, and that mean in kind I don't like Tesla or any of the other companies, which is in fact not correct. But you know, people get so emotional out there. Fed minutes. So all right, so that's up. Let me hop on Twitch real quick. See what everybody's doing on Twitch. Still on top chat and not live chat. Okay, I see everybody here. So just a heads up right away this morning. Just a heads up right away that I have it's April, right? And my wife right now thinks that or this is kind of weird too. Like, what is that? Got this really weirdness going on right now. Okay, that's better. That's better. That's better. So it's April right now, and unexpectedly, well, not unexpectedly, well, this year taxes. Let's start with taxes.
Just taking a look at the fear and greed index, 65 out of 100, signaling greed, and the crypto fear and greed index.
That's hilarious. Greed my ass.
Signaling greed.
It's funny, we got the fear and greed index, right? But in fact, we know that everyone is short the market. We know that everybody is short the market. Everybody is short this market. So that fear and greed index, you can just throw that shit out to the shit can. As far as greed being out there, the whole market's short. And I got to be careful of the language that I use this morning. And I'll explain why here in just a moment.
French Finance Minister Le Maire says, "We want to be more independent from the U.S. policy."
Now, it's April, and for us, at least for myself and my background, I have a family, wife, kids. I have homes.
And French Finance Minister Le Maire says there is a strong coordination between the U.S. and European positions on China.
Complicated tax stuff. And my children, we homeschool. We do a blend of homeschooling. And so what's weird is I haven't taken much time off, maybe a day here and there, but not any kind of like length of time. No vacation other than normal market close. You guys know I was here with you right through Christmas and New Year's and all that other stuff. No week-long vacation. As a matter of fact, during presidential week, my wife and kids were like, "We're out of here. We're leaving you." So you're left to your own devices. Coming into this week specifically, I don't know why, but as we came into this week specifically, stuff started to hit us that I have no choice but to help out along the way. And as a matter of fact, even into today, I was going to not stream today due to things we have going on, specifically tax stuff and my children's schooling. So my two daughters are homeschooled. They do a blend of homeschooling. There were
10:30
secular
a.m. Eastern
homeschoolers.
Time, we get the weekly EIA data. Crude oil inventories forecast minus 1.05 million on the prior minus 3.739 million, with a range of 3 million to minus 4.732 million. Gasoline inventories forecast minus 1.9 million on the prior minus 4.119 million. Distiller inventories forecast minus 0.2 million on the prior minus 3.632 million. And crude Cushing inventories prior minus 0.97 million.
And so we're home. So we homeschool, and it's for multiple reasons. One, we do travel a lot, and our children, of course, come with us. And we have a bunch of other reasons why we homeschool. But regardless, we can talk about that another time. Regardless, with this being finalization of taxes and stuff like that, and mad rushes and dashes, and my children being home, like, so my kids go to an online school called Pearson Academy, right? It's like part of their schooling. So there's a live teacher there with you, part of your day, and then we do our own stuff with them as well, right? It's like dual kind of homeschool program. And in tandem with that,
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels
dude, seriously,
by signing
financial
up
juice,
at
stop.
tothetick.com.
We also have to, we don't have to, but we do test with the state so that we get a real high school diploma for our children, and we're not kind of like the off-the-grid back mountain. No offense to any of you that are religious homeschoolers out there, or we're just normal people. And we were during COVID, there was no in-person testing. Just this time right here, we have in-person testing because they don't trust kids. They have the software for kids so that their eyes aren't shifty and all that kind of stuff. So they want you to show up in person. We thought it would be broken up, and it wasn't. It was like one test after another. And so as a matter of fact, this morning, I have one of my daughters with me because we're dealing with taxes and testing with another daughter. So just so you guys know right now, here, I'll switch back to this view right here. You see over my corner right there. Let me turn your mic on, Maggie. Hold on a second here. Let me turn your microphone on so you can say hi to everybody. Say something.
Hey everyone, I hope your day has been going well so far.
Now, I don't know if they can hear. Can you guys hear her talking right now by chance? Wave to the camera.
Hi.
Yeah, wave to the camera.
Okay.
Can you guys hear her? Right on. Okay, so they can hear you, Maggie.
Oh, well, hello everyone.
So Maggie's with me today. This is Maggie May, and she's with Daddy this morning.
Yep.
Doing her homeschooling. And while her other sister is at testing, and we still haven't done the finishing touches on taxes, so we have to go to the tax office and take care of all that stuff. So just want you to know that she's here with me today. So please bear with me this morning. I haven't been around, but I want you to know the reason I haven't been around is because some things with family and. So I'm gonna mute that for a minute. Family and. All right, I'll go back to the normal stream because I'm gonna get in trouble with people they're like, I want my alpha for free right now. Hold on a second here. So she's here with me this morning. So just a heads up that she's in the room with me. I'm playing Mr. Dad again, right? Mr. Mom one more day again today. It hasn't been a bad experience, but it's been a weird. Matter of fact, she was the one when I said when I was complaining about the cost of things. She spent the entire day with me, and of course I'm like grumpy old man going, I can't believe you guys do this, and I can't believe you guys do that, and blah 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 blah. And by the time I get home, I'm like, I can't believe you go through this to my wife. I'm like, I can't believe you have to deal with this all day long out there in the real world. So that's what's going on with me right now. It's been a challenge the past week into last week has been a complete challenge for us to kind of get where we need to be. She's my baby. That's the one that's going. We're going on a through hike eventually, right? We're gonna go hike the CDT or something.
The weekly EIA data.
Are you gonna hike the CDT with me?
Minus 1.05 million.
I'm
You're live.
No, I'm watching the stream.
Oh, you're watching it right now?
Yes, I'm watching it.
She's watching the stream and not doing her schoolwork. I'm in so much trouble.
Forecast minus 1.9 million. On the prior minus 4.119 million. Distiller inventories forecast minus 0.2 million. On the prior minus 3.632 million. And crude Cushing inventories prior minus 0.97 million.
I kid you not. Like if her mom's watching right now, I'm in deep trouble. She's like, I'm watching right now, Daddy. She's like, I'm not in online school. I got a pop screen, a screen open, watching the show. I'm like, great. Oh yeah, we got likes going on for Maggie. Maggie, you want to pop in a chat? You can. Yeah, no cussing for me today. I have to act like a normal adult again. You guys didn't get the rated G broadcast today. Rated G broadcast. Can't believe I'm doing this with my daughter today. Okay, that's what it is, though. So we're here. Everybody's saying hello to you, Maggie. Do you see that?
November 2023 EST.
Say hello in YouTube or Twitch, whatever you're on right now.
2% from
in the messaging app.
US CPI and implies peak ECB deposit rate above 3.7%.
Okay, now today is April 12th, right? We had CPI this morning. We saw the reaction on CPI. We all know what that was like. I did make a post on FinTwit. I wanted to post this yesterday before, but I was like, I'll save it for CPI. And I had assumed that a lot of people had already read this article. I think now it's a day or two old, but I thought it was succulent for CPI specifically. And you could see that squeeze higher this morning on the CPI news. And how short this market actually is. We saw that even heading into the past couple of weeks. How much of a hedge is placed on the S&P 500 right now? And the fascinating part of that article that I posted was that this is for pure profit and speculation. I'm going to bring this article up for you here in just a moment. But of course, today at 2 o'clock, we get the FOMC meeting minutes. And what I'm positing to you is that we're trading up into the minutes sounding like a Fed pause. There'll be some discussion of that, and that we're trading, or we're you like sell the news. People wonder why we sell the news. It's because they're pricing in a pause, not a rate cut, but a pause, or even some kind of like managed pause. Over time. Even the threat of that, we should trade up. And I'll show you later today, this morning, before the minutes are released. I'm going to explain my position on this because I fucking watch. Oh, shit. I swore. I gotta beat myself. Earmuffs, woman. I can't believe I just swore. Okay. So this is going to be a hard one today. It's not going to be an easy one.
I'll lead with the EIA crude oil inventories.
My posit here is I'm watching people pontificate out there about where the market should be on a Fed rate hike, or not a hike, a Fed cut, and then a pause, and how it impacts the market. And the truth is this. The truth is you need certain things. You need like all these things to line up for a rate cut to get the market to capitulate one last time. That's a key point. The second key point here is that when we get a rate pause, or even talk of a rate pause, or thought of a rate pause, or any of that kind of stuff, the market for that time period should trade sideways and
10
up.
seconds.
Now, everyone likes to gloss over this fact. What they like to do is get you a chart out there that's a 20-year chart, and they show you that it goes up and then it capitulates and crashes down. They don't show you the 5 months, 6 months, or even further back in time, the
597K,
years that we traded
597K.
sideways.
That's a draw on the forecast. A build on the forecast of minus 1.05 million. Gasoline inventories minus 0.33 million, minus 0.33 million. A build on the forecast of minus 1.9 million. Distiller inventories minus 0.606 million, minus 0.606 million. A draw on the forecast of minus 0.2 million. Still waiting for the Cushing inventories.
The other issue here,
Crude Cushing inventories minus 0.409 million, minus 0.409 million.
the other issue here is that if we're having discussions on a Fed pause or pausing or even any kind of like, oh, well, man, just pause, right? You're still likely going to see the Fed increase rates over time. Let's say they have talk about a pause. We're going to trade sideways and up. If we get a pause, we're going to trade sideways and up.
Inventories of crude and U.S. Strategic Petroleum Reserve off 1.6 million barrels to 369.58 million.
If we get a cut, we will capitulate. But nothing's lined up for a cut right now. The truth is, you're likely going to get more increases down the road. A pause. Think pause and rate increases over time. So again, we're jumping the gun on rate cuts. Another thing here too is Andy Constance had some great alpha out there. He's been posting on to FinTwit recently, and it's crazy because I'm reading this alpha. It's great alpha. I'll bring that up too this morning for you. And if you read it closely, everyone's like, it's bearish. I'm like, not really. If you read it closely, he talks about liquidity drying up in the first week of May. This kind of tracks with us having a great April and trading up into the beginning of May. It does track with us having a pullback in May. So it's not really as bearish as you might think that it is. The other points his posts have kind of hasn't been as bearish as you think it is. It's kind of in line with what to expect outside of unknown news, what to expect into the beginning of May. So not as bearish as people are thinking. As a matter of fact, the Seeking Alpha
WTI
article.
Crude stays higher.
I'll bring that up right now.
4% to $82.69.
No, I'll bring it up in a minute. Doesn't matter right now. You should have read it on your own. I've already posted it.
Oil inventories. And Fed Sparkin says the CPI report today was pretty much as expected.
If you read that article to the end, it even speaks about right at the end.
Particular focus on core inflation and still more to do there.
This liquidity not leaving the market until beginning of May, and so this kind of sounds right. It does sound logical after having a bad March and April 2 years ago or a year ago that we would have a decent one.
And I definitely see demand cooling.
Now we would have a decent one.
That's Fed Sparkin speaking in an interview on CNBC.
We would have a decent March and April
Fed Sparkin says,
this year.
I am watching that and lags as I contemplate my May meeting.
Let me make sure I got the daily trigger right here. 402.65. This is a daily trigger here. Way down here. 402.65.
Fed Sparkin says there is still more to do to get core inflation down.
Bulls haven't been given any relief, right? We're not even down at this daily trigger. Look at how high this hourly trigger is. It's literally been by the hourly trigger, by the hourly trigger, by the hourly trigger, by the hourly trigger. There hasn't been any chance for bulls to buy.
Certainly past peak inflation, but there's still a ways to go.
To buy anything but the hourly trigger. No chance to buy the daily trigger. Look at how low it is. We haven't seen this in some time at all. We've just been melting up melting up, melting up. So May, right? May sounds right this year. When you have one bad year, one bad April, and one bad March, you're statistically you have an even better chance of having a pretty good March and April. With all of that said, we know about the debt ceiling. We know about the invasion for Taiwan, right? We know about...
Ed Sparkin says, in my view, is as we react to inflation as it comes in terms of the rate path. Just to repeat there, Fed Sparkin says, my view is we react to inflation as it comes in terms of the rate path. And I am looking very hard at demand and labor market and inflation.
We know about sell in May, go away. We know in summer times we usually have a dip, right? So we know those things are already there. We know that our chances this year, the probability and likelihood of having a more stabilized market, we know that this year specifically, and even since October, have been a return to a normalization of markets so far. A return to normalization of markets. So far, that's all it's shown us. We haven't been shown anything else except for a return to a normalization of market functions. So this all looks normal. Do we get a dip into the 18th, 19th, 20th of April? I think we do. I think we do get that. Today's April 12th, right? I think leading into the 18th, 19th, 20th, we get a pullback. This is the return to normalization of markets.
Demand is cooling.
That otherwise, outside of something unknown, things have been
Fed Sparkin says he
pretty
is
much
seeing signs that demand is cooling.
Things have been pretty much expected to an extent. So we'll take a look. I'm gonna show you guys the Indy Constant stuff. I'm gonna show you guys the Fed funds rate, the yield curve inversion. I'll show you the unemployment rates, inflation, the S&P 500, a rate pause, what normally happens in a rate pause, or even the discussion of a rate pause, and its impact on the market, and how long that can last. That can last 3 months, 6 months, 9 months, years, if it's something where we go back from a pause to another 25 BPS.
Fed Sparkin says if you want to get inflation back to the goal, you need multiple months where it's headed there.
So, we already talked about we've already talked about when we do get the capitulation phase. We've talked about it ad nauseum, right? We have to be above the rate of inflation. We're not there yet, are we?
The day is high. Fed Sparkin says trend lines do matter, but we need to get back to inflation goal.
So let's take a look at the. Let me mute this book map real quick.
Fed Sparkin says we don't want to declare victory prematurely on inflation.
And just look at this here. Gnarly, huh? This is a 1 minute chart. Let's look at a 30-minute chart really quick. We can see right down here that the daily is slightly overbought, but it's been overbought for some time now, right? Been overbought. Just keep cranking away right now. Hourly still looks good. And you've just been buying the hourly. Any dips below the hourly, just buying it. Where does a bull want to buy it? Well, the bull's bought it back down here.
Fed Sparkin says, I'm not hearing there is much change in bank lending at the moment.
And they want to buy 402.66, right? I talked to you about the VIX as well. Well, we won't do VX. We'll do VIX. And remember when I talked to you last week about the VIX, and I was like, what'll be horrible is if we just do this, right? This is the melt up. This is what a melt up looks like on the VIX historically. If you go back in history, and this whole thing right here is exactly what a melt up in the market looks like. Just like that. And you'll see this, that this is actually just showing us the melt up, right? You'll see right here, we just got a buy down below in the VIX. This was at 810, and now it's cranking higher right now. Let's look at on the 1 minute chart. And it just zigs and zags and zigs and zags. And if you look closely here, this looks like, you can see here, it just gets sold right back down, right? right off that daily. And until that daily gets above 20 bucks, 20. Right now it's $20.20. It's going to continue to be sold down, sold down, sold down. It's just intraday kind of stuff. What are we looking for here, right? We're looking for, we have the sellers here above at 1941. And we know we're going to look for support in the market whenever we trade up here and whenever we trade up here as well. So keep this on your charts at home, $20.28. And then right where we are right now, $19.06 on the VIX. Nice little bear cross right here, a little bit of a bear airplane right above us. We'll take a look in the 5-minute here. 5-minute chart. I'm gonna not delete, but get rid of this one real quick here, just so we can see it closely. Bear flag forming above right now in the 5-minute. Go back to the 1-minute. Beautiful bear flag right here, or barrelplane we call it, not a bear flag, but a barrelplane. If you want to get bearish here, you're looking to sell 410.80. Now I'll put the other. This is the 6. This is the 6. Let me see here. Style 6 CMA right here.
I am seeing demand cooling, but I am waiting for inflation to crack. We're not seeing evidence of that yet. And Fed Sparkin says, I need to see inflation down at the target rate over the successive months.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Fed Sparkin says we'll get the PCE data on Friday before the meeting, as well as the ECI data. Both are important.
Just a second here. The moment I stop talking, they stop talking. So I'm going to pop this article into the live stream here. This is an archive version for you. I'm going to pop it into the discussion. This is a free version of the article that I was discussing with you this morning. $4134. You guys can read this right here. I'm going to show you some previous some H lines in here. Some Jason Hendricks lines. There's one right there. And there's a previous low from yesterday. Show you guys where these are right here. There's one right here. Another previous low. Yeah, that's S2, I believe. Hang tight here. And S3 previous low down here. We'll tag one more down here so you can see it. There's a previous low there and another previous low down here. Bunch of H lines down below. And then what do we got here? So read that article if you can in the background there. Traders are growing. This is a 5-minute chart. I'm going to come back to the... Second, I got a couple more technical things for you for the day. For the Fed minutes. We also talked last week about, I think we talked about it in the program, and then we talked about it on FinTwit, and that was the implied move does not open up until the 12th. And you can see that happening this morning. And so just for today, 411.90. Hang tight 1 second. I got some stuff going on here. So the implied move for today Give me 1 second. I'll be right back. All right, there I'm back real quick. Whew. Implied move for the options market today. We've got 412.08. $408.48. Already tagged the upper implied move. Have not tagged the bottom end of the implied move today.
At 11 a.m. Eastern Time, we get the Bank of Canada press conference with Bank of Canada's Governor Macklem.
We've got 422 on board for May. 428, we've got 419.31 on the high and 401 on the low. So 401 would be the low move into April 28th, and on the high side, 419.28. Market seems to be looking forward at this point. So if we trade out of this range today, right? If we trade out of this range, this implied move for today, we're probably going to get a pretty decent signal. My point here being is that we should get a pretty decent signal if we begin to break out of an implied move. If we into these minutes today, if we start to break below the implied move, the signal's going to be lower, right? Even if we tag up here and come back down and then make our way higher, we're going to know which direction, where the nod is, where the market is going, up or down from here. Because we do have range expansion after today's expiry into end of the month. Discord link. Yeah, I'll do a Discord link for you. Hold on. There's one Discord link for Twitch. Here is another Discord link for YouTube. So that story that I posted for you inside of the chat says bets against U.S. stocks swell to highest level since 2011. History shows that's actually good news for markets. Traders are growing increasingly confident that U.S. stocks are headed for a sell-off, but history shows the opposite is more likely, according to an analysis by one micro-strategist. Speculative traders are more bearish than at any other time in the last decade, according to the latest release from the Commodity Futures Trading Commission's weekly Commitment of Traders report, which tracks futures market positioning in a number of currencies, commodities, and the U.S. equity indexes. Net short bets by non-commercial traders in the S&P 500 E-mini futures have swelled to 321,459 contracts as of April 4th, the largest since October 2011. This coincides with the idea that if you're going to, this coincides with the idea that we posited last week that if you're going to bet against the market right now, your best bet is to take on a ratio spread, a putback spread, and trade the melt up, right? You trade the melt up. You don't take a short. You don't actually short the market down or like balls in short. You're not in that crowded field. And you actually put your short, quote unquote, or your I don't know, I forget what some of these terms people are using out there right now. I'm kind of finding funny, but
yield rises to the highest since March 13th at 3.6%, last up 4 basis points on the day.
You know, not just long puts the market or just short the market. The easy way right now, the easy button is to trade this market melt up, and you put a hedge on the market
This stream is
in the
sponsored
form
by
of a
To The
putback
Tick.
spread.
Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
If you get the roll in the market, you get paid. If the market continues to trade up and to the right, you get paid. Now, you're going to need to see the market do certain things for you to take a more aggressive approach, I should say, to the market. This doesn't mean you can't buy puts on an intraday like 0 dates or something. You don't chase the hole into the close. It doesn't mean that you can't get aggressive momentarily if we break below. So this is the hourly trigger. If we break below this hourly trigger and confirm the move lower, you can do something intraday. But like I'm net short the market doesn't really work and it hasn't really worked for a poor retail trader. Now, if you're some rich short-only hedge fund or something like that,
At 11
go
a.m.
ahead.
Eastern time, we get the
You can
Bank
do
of
that. You have
Canada
the
press conference
if you're a
with
prop trader trading
Bank
someone
Canada's
else's
Governor
money,
Macklem.
go right ahead. But if you're a retail trader, you likely will get caught in that web right there, and you don't want to get caught in that web as a retail trader. That's how you go back and get a job. So what you do is you trade the melt up to the right and up with a hedge on the market in the form of a putback ratio spread of some kind. Futures market positioning is generally viewed as a counter indicator by equity strategists, meaning the market often does the opposite of what futures traders expect, especially when positioning becomes notably crowded in one direction or the other. Now, this is discluding a non-commercial
The Swiss
trader.
government says Parliament's rejection of the state aid package for the UBS takeover of Credit Suisse won't derail the deal.
A non-commercial trader is someone that's in it for profit. This isn't like a dealer's hedging. This isn't market makers. This isn't someone protecting their long position in the market in futures. This is someone trying to make profit in futures. So futures market positioning is viewed as counter indicator, blah, blah, blah. Over the last 25 years, outsized short positioning in futures has typically served as a counter indicator, according to Brent Donnelly, a global macro strategist at Spectrum Markets.
Donnelly, the S&P 500 turns negative, erasing morning's gains.
Donnelly highlighted 6 periods since 2000 where position in the E-minis became notably stretched to the downside. During 4 of those periods, the signal turned out to be a bullish indicator, meaning that stocks were higher in 6 months to 1 year later. Quote, my impression is it's probably not any different this time. Donnelly said during a phone interview with MarketWatch, people are betting on a crisis. They're betting on a crisis. But I just don't think it's going to happen. And that's the key point here. Are we in a crisis or not? Remember this implied move down below for today. At the same time, that short
average product supplied or finished motor gasoline rises last week to the highest since December 2021, according to EIA data.
At the same time, that short positioning has been growing. Sell-side equity strategists across Wall Street have become increasingly pessimistic.
The UBS takeover of Credit Suisse have already been fully committed,
advising clients that the S&P 500 might finally be poised to break lower after rising more than 7% since the start of the year, according to FactSet data. Now, let's talk about time frames on this. I'm not anti having your April down third week of April. I'm not anti sell in May, go away. I'm not anti in going down for June or July. But this heavy bet on a crisis that we have on the market right now, I don't particularly see. I don't particularly see like the one that we're looking for, the big one. We saw that the regional banking crisis, quote unquote, was supported by the Fed. As we see the business cycle continue, you're likely going to see the Fed step in and be supportive. As long as you see that Fed be supportive, you're likely going to see the markets not capitulate the way that you're looking for, whether you're a bull or a bear. I think bulls and bears want that capitulation. I just don't think that I see it today. I don't see it. I don't see it tomorrow. I don't see it this summer. I see lows, but I don't see that capitulation phase. Now, there are reasons for that, my opinion, there to change. There are Elliott waivers out there that say, with the moment trend changes.
Shortly expecting comments from the Bank of Canada press conference with Macklem.
The moment trend changes, we will have that capitulation moment. We know where the daily trigger is. We know that it's way down here, right at 402. Currently, it's sitting here at 402.48 or so. As long as we have that, as long as we stay above that daily trigger in trend, we should continue to trend up this year. You're going to see people get itchy this year because we're in this because we've all planned for this, right? We're all been like, yeah, all right, we're getting it in 2023. We're getting that last capitulation in the trough, and we're in April, right? So the drumbeat will only grow louder as we head into the end of this year. The only thing I would say to you on that note would be if we have these seasonal, normal capitulation moments, to only drink the Kool-Aid as we go down for each layer, right? Each level. If we trade
Bank
down
of
for the
Canada's
month of
Macklem
April.
reiterates that with inflation still well above the target, the bank continues to be more concerned about the upside risk to forecasts. And the Canadian economy remains in excess demand. The bank is encouraged that inflation is declining, and the Governing Council considered the likelihood that rates may need to remain restrictive for longer to return inflation to 2% target. The work of the monetary policy and the full impact of previous rate hikes is not done.
Okay, it's now 11 o'clock this morning. Checking my watch right now. The idea being here is that if you're a bear out there, you can only get as bearish as what the expectation is. If you're looking for that market collapse moment,
things need to unfold before reaching the 2% inflation.
Or that last capitulation move down.
The squeeze from higher borrowing costs.
Boy, they're talking heavy today, man.
The work of monetary policy is not done. Bank of Canada's Macklem says inflation won't get to 2% until late 2024.
Excuse me. The idea here is if you're a bear, you're looking for certain things to happen first before you look for that capitulation move. You're going to expect people that are hoping for that capitulation move, they've been planning for it. They're being paused right now, basically, from getting that move. You're getting the Fed saying, whoa, hold on a minute here. Hold on, we're not quite ready for the capitulation move to happen in the market. They kind of screwed bears over when we had the regional banking crisis. And you're actually hearing some of that from these Fed presidents this morning. It is funny to see Barkin right now saying we'll get PCE and ECI data on Friday before the meeting, and both are crucial. I guess CPI data was crucial as well today, right? And Barkin's also saying you need to see inflation down at the target rate over successive months. So they'll have the talk today of a pause, more than likely. You'll hear that talk, and then you'll still hear them, even though we have that being priced in, likely rate increases as we continue forward. The fly in the ointment here for bears truly is the being supportive of the market as they rate increase. I think I'd said one time to you guys before, I was like, bears are being screwed here. They're not getting, they're getting the support of the regional banks is a fly in the ointment for bears. The debt sheet, the debt balance is a fly in the ointment for bears. You can call it like what you want. You can say it's not printing money. They were warehousing money, quote unquote, taking it out of the system, but then they reintroduced it into the system. And if they continue on that path where they introduce that money back into the system over the next year or so, they pause, they slow down rate increases. It just stretches out all this time we're waiting where we trade sideways. We don't get that last capitulation move down. And even then we talk about price around here oftentimes. What is the price? What is the capitulation? Is it 10%? Is it 20%? Is it 30%? Where is it 10, 20, and 30% from? Is it from 345? We got we got people saying we're going to 420. Even the LA waivers are like 420 is the target. 4200 is the target. I'm like, man, that's not too far off from 345. I'm like 345 and we're at 345, right? We go to 3200. That's a 200-point move from our low in 2022. So are we changing the targets? Are we changing? Does that just retest of the previous low? 200 points we can put on the board in 2 weeks. So I'm like, if we hit 345 and then we hit 3200, we're no longer discussing 2800 or 1600 or whatever nonsense, 2400. It's not that far off, is it? It looks more like a confirmation trade to go higher in the market. So just from that perspective, percentages and prices as to this crash that we're going to have, you probably should have bought 345, right? you probably should go back and buy 3,200, right? The demand should be there. We talk about how years from now, when you look back on these moments, you're going to say, man, I should have bought that 3,450. I should have bought that 3,200 and traded this market up and not listened, because you have to remember, I want you to remember this 5 years from now, that you're going to look back and say, we were talking about 2,800. We're talking about 60. We never even got close to that. We got down to 34, 32 targets like that. Our last capitulation in the trough phase didn't bring us down to 14 or 1,600 in the market. It brings up another question. This is one that Winky brought up to me. We're talking together, and he was like, are people expecting the market to crash to 1,400 or 2,000 every 2 or 3 years? What impact does that have on people in the market? His other question, too, that he made a fair point about was, what about being a desk that's always short side right now, that's always selling this market? Typically, it ends up blowing up hedge funds at some point down the road. Usually, over time, probability favors a bull. If you look at this market since its inception, right? Every 1 to 3 years, we go on a bull run. And this is where sell side gets run over. So I'm sitting on a desk, and I've had to be short the S&P 500 specifically. The S&P 500, not individual ticker, the S&P 500. And you're just short all the time. You're just like, we're net short. The longer you do that, the higher risk comes into play of blowing up your hedge fund. And I mean, get run over. So time favors a bull. The Fed knows this. When you hear that soft landing or no landing argument from the Fed, it's time. That's what they're talking about. Time. The more time that we spend down here, the more time that we're down here, you will see a few things happen. Inflation continues to move up. The valuation and growth in our economy, even if it slows, goes up. Goes up, goes up, goes up. It always goes up. Well, now it fluctuates. It's a curve, but it always goes up. And so the longer you see us down here, the more of a chance of this explosive move higher at some point. Hey, what's up, Monkey? How you doing, man? I just saw you're in the stream, man. Good morning, brother. How you been? Nice. Implied move 408.48 down here. Tag the upper move, and no, we've tagged the lower move on the morning. See if this holds right down in here. You see this implied move over here. We also have, if you look down below, you'll see, let me see if I can move this stuff over. There we go. Let's tighten this up down here. See if we see any pockets down below. Any supply zones? See that nice one down there? What is that? 410? 411 down below in ES. If you look down below, it's that little light blue line down there. You can see the hedge on the market for the minutes. So exciting. Let me ask you guys, do you guys think that the hedge comes off at 11:30 or 1:30 today? Normally the hedge comes off between 11:30 and 1:30. See if you can find that article from Seeking Alpha, which I'm not a fan of Seeking Alpha, generally speaking, but every once in a while someone posts something good on there.
US gasoline futures give up some losses, even as EIA data shows a smaller than expected draw in stocks.
All right, here's a Seeking Alpha article. Copy this one. Now, I'm not normally a fan of Seeking Alpha, but this person that posted this article is not, I don't think, affiliated with Seeking Alpha. I'm going to post the article inside the stream for you. That work? There we go. You can read this on your own. The article is titled Tax Season and the Coming Liquidity Downturn. I would direct your attention specifically down to the end of this article. So I can get down there right now and read it with you.
Bank of Japan's Ueda says we want to make the first step to closer ties with peers.
No, I don't see it in the last one. Let me see where it is. Tail wagging the dog, career low. Here, let me see if I can find it right here, bro. Tail wagging the dog. Is this from 2020 or 2017? What's the release date on that one, career low?
Bank of Canada Governor Macklem, when asked whether the bank is now ruling out a recession in 2023, says we need a period of weak growth. And the outlook for growth has not changed very much, and Macklem says that Canada needs a period of...
Yeah, I see multiple. I see one from June 18th, 2020, and then I see one from 2017. I see one from February 14th, 2021. See a bunch of them. I mean, can you post the link in there, Carillo?
Bank of Canada's Macklem says we are not forecasting a major contraction.
Your audio volume is low. Let me take a look here. Actual Dan, is your audio volume low from me speaking or from listening to the news squawker?
Bank of Canada's Macklem says you can't rule out that there's going to be a couple of quarters of small negatives.
Actual Dan, hold on, I can't read what my thing is lagging right now.
Bank of Canada's Macklem says
hey, thanks,
our
Russian.
baseline
Appreciate it.
forecast is for a positive but weak growth and declining inflation.
Actual Dan, is it my voice or is it the news squawk for you? Check 1, 2. Let me check my check 1, 2. I can turn my side up, brother, a little bit if that helps. Does that help you at all? Can you hear me now better? Is that louder? I think that's louder, but I'm not positive. Don't buy this dip right here. Or I can't say don't buy this dip right here. I wouldn't be buying this dip right here. If anyone's trying to buy that dip. VIX now trading higher than its 1, 5, and hourly trigger. Is that better, actual Dan? Right on. Yeah, it looks like one of our listeners. Squawk is really low. Okay. I'll turn Squawk up for you, brother. They set their levels different every day. And so sometimes I have to adjust it on my end. Yeah, it's likely a trap right here. I'll show you guys in the back end what I'm looking at here. This is the VIX right here. You can see this 1 minute right here. This is the 1 minute. This is the 5 minute. This is the hourly. This is a 3 trigger cluster right here. I'm going to look for a push up on SPY right now, but then this to hold and move higher here. So look for a squeeze here, and then a swift reversal and hold down if possible. I'm going to assume that there's a hedge on the market right now. Bear cross on the 5 minute above here. I want you to be aware of this right here above us. So this could be a bull trap. I want you to just see this right here. Don't ever like seeing these. Don't like seeing them form on a 5 minute chart, to say the least. If we, hold on here. Are you singing? Sing for daddy. I like when you sing. I don't ever want you to grow old, by the way, either. Hearing you sing in your youth makes daddy very happy. Even if we trade up here, could be a trap down lower here. Could also be a trap down lower here. You could also get trapped in here, waiting for 2 p.m. Five-minute chart on SPY right now. And I got asked to look at Tesla this morning, so we'll take a look at Tesla.
BLS says there's no indication of early release of the March CPI data.
What?
And Goldman Sachs says we no longer expect a June
Fed
rate
ask that question
increase.
on the stream? Hold on here.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
I took down Michael Burry today because my daughter is sitting on the other side of my desk this morning. If you're just joining us, I've got my daughter with me today. We're going through a bunch of tax stuff for our home and stuff, and then a bunch of testing, state testing that we have to do, in-person stuff that's just got us all frazzled. So Tesla, you want to talk about that, right? Talk about Tesla real quick. Or you want a Tesla update? Tesla. This is a 1 minute chart on Tesla right now. I like the dips in Tesla. I like seeing these yellow bars down lower, but even with that being said, I do like seeing these dip buys down below on Tesla, like the Tesla's holding up in the red box up here. Even with that said, I would not be long Tesla unless price and not only price. Well, look how they sold this right down right here too.
And Bank of
On
Canada's
Tesla,
Macklem
just
says
boom,
Bank of
sell it
Canada
right down
discussed
on
the
you.
need for rates to stay higher for longer.
Like, get down there, get down there. Why is that? Why do we have sell side finding this to be so risky down below? It's because you're on the daily trend, right? The 1, the 5 minute, the 5 minute, the hourly, and the daily. This right here is very, very volatile right here. If price stays above the hourly, the 5 minute, and the 1 minute, you're going to see sellers step in. Why so aggressive, though, would be the question. That's because that's where all of the sell side is. We know as we come up into this zone, this is a 30-minute chart now in Tesla, we already know for a fact that the higher we trade up here, there's your 220, by the way, right? The moment we begin to consolidate and trade up in here, that becomes very aggressive, right? You already know how aggressive it becomes. You know that that sell side is above here, right? They sold here, they sold here, they sold right here, right? We know where the sellers are. We know if we trade up here and break above sellers, that we begin to squeeze and you see 223. And not only that, any more consolidation down here, we start to run over.
Canada's Macklem says the implied expectation in the market is that we're going to be cutting our policy rate later in the year. That doesn't look today like the most likely scenario to us.
Sell side and take out that 300 above, right? So you're going to see sell side be aggressive where we are right now. So if you want to get long on Tesla here in safety, you want price to be above the 1 minute at 183.40. Price to be above. Take along with a stop underneath. You know that there's also right down in here. If you want to take, you would need well, we could have a check, but you want price to be above 183.46, and your target above is 185.76. Let's call it 185.50. No. And here's a key point right here. When you're trading this up, right, with all of this volatility in here, right, you're always looking for the confirmation, right? Take that next trade there. And the same thing goes for here. If you take this trade higher, show you this here. If you take this trade higher, right, you need the confirmation to put your next one on, right? You wait for the confirmation, the trade higher, right? The confirmation trade is the bounce. This is where the money is right here. And the same thing goes for trading above the daily trigger here. So let's say we squeeze. Let's just say we do this, right? You take the second leg of the trade, right? You break above here. You're not in the trade any longer here. You're re-entering the trade if it bounces on the daily trigger here, right? With no bounce here, there was no trade for you. You wanted to see price confirm that the move is higher, right? Does that make sense? Same thing goes for this 193.21. Then your next stop above there, 221.78, 221.50. Now, for macro market conditions right now, what I just told you about the S&P 500, that this looks like a bull trap on S&P 500. Would I take this trade today on Fed Minute Day? I think it's none of your. I don't think it's the best trade to take on Fed Day or a Fed Minute Day. It's not the best trade to take. The one thing on your side, the one good thing on your side for this trade is that typically on Fed rate decision days, on Fed minute decision days, you'll see the hedge come off the market between 11:30 and 1:30 in the afternoon. So if you want something on your side, the one thing I would give you would be that you typically see the hedge begin to come off as we come into that Fed minute decision. But on Fed rate day, it's not really Tesla day, is it? It's kind of Fed minute day. Hey Cap, what's your white line? So it's not an EMA. I try to associate them with EMAs on a simplified chart on Webull for you. I will get you guys something right here for you. Hang tight here. Hey Winky, do we have that white paper? Forget how to post that. Thanks, Winky. Dude, Winky's always there, man. Here you go, David G. Read that. Nice support coming into the market. Tag the lower implied move. Cleared out all of these previous lows from the previous day. 1, 2, and 3 from previous day. Had a new low on the day as well.
Canada's Macklem says the federal and provincial government spending plans are not standing in the way of getting inflation back to 2% target.
Wiggy's the man. Let's have a look here and see. Let's have a look here and see what SPY options are doing here. I'm getting frisky here. Oh no, hold on. I was trying to bring up SPY options here in the background. Hold on. Let's see what the day is weighted on right now. 412 C's only 21 cents, huh? 271,000 calls, man. Everybody's on the call side right now. Jeez. That's not helpful. I was hoping to see everybody on the put side here. That's not helpful to see. The one thing I would say to you, David, is that please read the entire thing. Don't read what you want to read. Read the entire thing, please. Yeah, I'm looking at 412Cs on the options chain. I haven't looked at the implied move yet. Not the implied move, the hold on here. Let me check implied volatility right now. Hang tight. What chart? I'm looking for the intraday call and put buying. Hold on. Hey, Tim, I got to do some work here in the background here. Yeah, still no call buying right now. This is squeezing. Wait a minute here. Maybe there is. Hold on. Maybe I'm messing this up here. Hold on. Yeah, there was a little bit just then, but time was that 8:30. Yeah, still no call buying right now that I can see. See if I can dump some It's getting close, but not quite there. This is crazy watching this right now. I'm watching my I love you.
Natural gas prices turned sharply lower, down 4.3% to $2.09.
Industrials and tech, huh? Man, tech, dude, a rebuying of tech could just launch this market so high. It's crazy too. So I'm looking at the market, how net short the market is right now. It's kind of wild. It's just showing melt up, dude, so bad. melt up and then roll over. VIX's still supportive right now. No trade for bulls currently. So 5-minute chart still showing a trap for bulls above here. It's a 5-minute chart right here. I know. I can't believe I got my daughter with me today. She's watching the show in the background with me today too. Her mom's gonna be so upset with me. I told her mom, I'm like, yeah, I'm like, we'll just do our thing this morning. Yeah, Jill. You know the hedges on the market for like we're between 11:30, 1:30. We should start seeing the move higher at some point. We did see here at 11:15 it started. And my one thing that I don't like, Jill, is the options market is long. I don't like. I want to see the options market more short here. Not short, but long puts, not long calls. They're like long. They're all long right now. Whenever that happens, I'm like, yeah, I don't like it. Well, what I don't like right now is everyone's long calls here. I mean, we got 273,000. They just keep buying them too. They're all buying 412Cs, doubling down. I don't like seeing it. I would prefer where we are right now. My preference is to see us loaded to the tits on puts, and we use that as fuel to go higher. On 0 dates, at least. No, the intraday stuff is what I'm looking. So the intraday stuff is what I'm looking at. Career. I'm looking at the intraday stuff, and they're just loading. They're just loading the boat right now with calls on 412. I guess what I don't like is. I guess my question here is: do we do this nonsense today? Right? Just this ping pong. Even with the minute news, do we? Let's say we get this nice rip higher into the minutes. Well, I guess here, 2 o'clock's over here. Get that nice rip higher, and then it just sells off. Market is wound tightly today. Yeah, your put to call doesn't really play though into intraday stuff. I'll add some on. Let me look at the VIX really quick. You're getting counter traded hard. Yeah, there's like a sell this and buy this going on with the implied move. And unless we trade outside of this range on some news, unknown news, kind of buy the dip, sell the rip, buy the dip, sell the rip. You think it's Elon? If you want to buy calls here, you want to see us trade above this. This right here, it's pretty fucking bearish, to be honest with you. And until we trade above it, but until we trade above the white line here, there really isn't a place for you to take it with no risk. You're looking for price to. This is a 5-minute chart to run right now. You're looking for price to regain its composure here, and retest, consolidate, and then make its move higher. This is the actual trade for a bull right here. Right down in here. All of this stuff down here is very dangerous. You can get caught in this. Caught in a consolidation. If you are long right now, you don't want to trade it above 410.02 or near it. Bliss is saying, hold on, I'm reading. Bliss is saying, Cap, can you go over how IV on days like FOMC can inflate premiums, which then get repriced lower the following day? I'm trying to figure out if it's worth getting an option before close. So a couple things, Bliss, is you've got the event vol that should run off the market. Normally the market will trade higher due to that. Once the event vol comes off, you should see volatility leave the market, right? So think about it, to simplify it. Heading into an event, there are institutions that are long the market. They own the market. So let's say I own Apple, right? I own the underlying. Let's say I own $100 million worth of Apple, and we're coming into an event that we know about. There's a cheap way for me to hedge to hedge my position I hedge the market in my position, right? By hedging, right? by either selling the market with being short the market or cheap puts in the SPY complex, believe it or not, right? And the moment or the closer we get to the event, I can take my hedge off. Maybe I already know what the news is going to be. Take my hedge off, the market squeezes higher. Does it make sense? Normally. Now, if there's some bad news in the market, we start trading down. They're going to sell the market, re-hedge the market. Any bad news, something they didn't expect, something like that, they'll re-hedge the market short, sell the market short, and we'll go down, right? But if nothing is unexpected inside of the minutes, specifically today, you should see the market squeeze higher once people take their hedges off their long positions in the market, right? Now, inside of that event vol, it actually gets repriced 2 or 3 times. You'll see the event vol come off the market as we head into the event, right? You'll actually see a repricing of options. This is now interest in calls, right? Not as much interest the second time around. Not as much interest in put side, right? And dealers don't want to pay once participants leave the market. They're not going to pay the premium that was built into those options into the market. So you'll see like 2 or 3 volatility events come off, or volatility repricing of the event come off throughout the day, and then even into the following day. A way to beat that would be to, if you're like, hey, I want to buy some options and this event's pissing me off, you buy them farther out in time, a month, 2 months out in time, maybe sometimes a couple weeks, but frequently days like today. You'll also get the real move afterwards as well. Sometimes you'll hear that people talk about that. So the event vol come off, will squeeze higher, and the actual move is down later on in time, like tomorrow, something like that. So if you're trying to like trade today and not get trapped in that event vol, you'd take like a month out position, and then you'd close it before the end of today, because you could get a real move that's on the reverse of whatever position you took. Does that make sense as well? If you're trading the event vol, and you don't want to get caught in the event vol or premium, you take a farther out in time option would be a way to combat that. Spread would also help with that trade, or you just wait for the event to cease and then come back the following day. You generally just buy 11:30 and set the stop at 10%. Yeah, I agree, Devin. It's a pretty fair trade, man. 11:30 to 1:30, you start to see that hedge come off. Someone's asking, why does it come off? Because they got paid already. They got paid to cover whatever happens inside of that trade. So if you put the hedge on the market, you make your money, right? You made your money in here. You put the hedge on the market above before the open. You get paid. You take the hedge off. You pocket that money. And that's going to counter any kind of initial down move. Then you re-hedge here if there is bad news. Does that make sense? So the hedge came on this morning above, right? You got the hedge. You're printing your hedge. You take it off at 11:30, 1:30 in the afternoon. We start to trade out higher as the event vol comes off. If there's any bad news, and we start to trade down, you've already made your money here, right? On being long the market somewhere else. You can re-hedge here and take it lower. Chances we get 415 today? Highly unlikely. I think we trade 412. Unless there's something unknown, I think we trade just below 412, and then we bleed off. Maybe. I don't see it, at least. Oh, yeah, I'd like to see 415. I just don't think we see it. Oh, maybe you mean on ES. If you're talking about this chart down here, yeah, we can see 415 on ES. On SPY, likely not. If
At
you're
12
saying
p.m.
like
Eastern time, we
415
expect
on ES,
momentum
yeah,
bids
that's
daily.
possible. $4.15 tomorrow. Likely not. I see us melting up, man. I kid you not. It is nasty. You buy dips and sell rips. I think you see 420 on the end of the month. Hopefully. Well, that's the one. I think my assumption here, Devin, is that we get those big dogs coming back in for the last pump. There'll be one more rotation into those names, into that beginning of May, early May. That's the hope. We've rotated out of industrials and tech, right? Both of those are getting ready almost to get back into. That's my expectation, is that you'll see that. That'll take us up to that 415, 420 into end of the month. I think you need both industrials and tech. Tech being the bigger driver. Yeah, I don't know if I'm explaining that well enough for you, Bliss. Like trading events like this, kind of hard. It's kind of hard with if you're trading like closed state options on event days. There's like hard and fast rules that I use. Whatever the implied move is, they tend to fail on that move. We tend to like trade near it, and right before you're gonna hit the money, they take it off from you. We don't actually hit it. Or at least the first rip. So how do I explain that better? So let's say news is positive today. I would expect us to rip higher, right? But then you get the failure. And even if you're gonna go higher, it's not until they wiped out the value of these options, they reprice all these options, then they go higher. So you kind of like want to close that trade and then rebuy for the second rip above 412. So if we are going to go above 412, you'll see they'll fucking reprice them every time. Another famous one that likes to happen is you go up there, you won't get past the 412, and they'll rip it the second day, right? So they clear out all these options. It's very similar to ER reports. Yeah, and the tech. That's my big. I think that's what we need, right, Joe? I think that if you're going to get the rotation trade, you're kind of hoping for the market to just kind of hold on long enough for that rotation trade to kick back in on tech. Free Money Fridays, baby, on tech 0 dates. Tech right now is at 60%. Tech and industrials are at 60%. Everything else is maxed out right now, it looks like. VIX getting beaten down once again. The S&P 500 typically has. Here, let me show you guys something. So the S&P 500. So the question became, how has tech been rotated out of? So the S&P 500 is made up of sectors, right? You have tech, communications. You've got oil. You've got all these different sectors of S&P 500, right? You've got energy. You've got consumer discretionaries. Anyways, you've got different sectors of the S&P 500. The stock market works in ebbs and flows. We have larger, some of these sectors weigh more heavily than other sectors. And some of these sectors also are more indicative of risk on or risk off in the market. Some of them are drivers of the market. So if you're in a risk on positioning, you'll see riskier sectors get traded first. Typically, tech is one of those. Speculative growth is one of those. So the market will rotate into being in a risk-on position on a market low. So you'll see those main drivers of our market, heavily weighted tickers, go on first, right? So we'll rotate into those tickers, i.e., let's say NVDA or Tesla or Apple or what have you. And then normally the market is not done there. There'll be other sectors that have not been rotated into in that initial bullish run. So you'll see people take profit, right, and rotate into another sector that's not as risky, but they want to still have some exposure in the market, right? So you'll see a second leg for, have you ever noticed when we're in tops, it takes a little while for us to come back down, and then when we capitulate, it's the elevator down, right? So you'll see the market hold up longer, and then we'll rotate into other sectors of the S&P 500. Now, while all that rotation is happening, sometimes we'll get a capitulation phase, right? Rotate it through every sector. We'll begin to sell out of each sector all at the same time in some kind of unison. You'll find a little bit of money will be left hanging out in, let's say, utilities, another sector or two. These are all risk-off sectors. You'll see money still sitting in the market. And then, and once in a while, you'll see a capitulation or a liquidation phase. Sometimes you do not. Now, you're tracking price of the S&P 500 to see if we get that liquidation phase or not. If we don't, trend is still on. We'll begin to re-rotate back into tech. So you're going to expect, if we don't get a liquidation phase, you'll expect the market to continue higher, grind higher. And that's what the idea that Joe and I are talking about would be. You'd have that little bit of weakness into the middle of April. We won't have a liquidation phase in the market. You'd see a rotation back into tech for the beginning of May. And if you want a way to see if you want to see the rotation trade, direct you to two different things. You could look up a market breadth indicator that'll show you the rotation trade at a percentage value, or you could also go to another good resource would be stockcharts.com. Has charts to show you the rotation trade in and out of sectors, and then you can also look at business cycles and seasonal cycles for larger time frames. You can also go to Thinkorswim, has some really great charts as well that shows you the rotation trade as it happens. We've got some 412Cs that are doing well. They were at 19 cents. They're at 28 right now.
Surely expecting comments from Feds Daily.
Daily about to speak now. Coming in at 12 o'clock, you might want to take some money off. Look above here. You can see that 415 right here. Some supply on high here. Goldman Sachs continues to forecast a quarter-point Fed rate increase in May. Goldman Sachs no longer anticipates a Fed.
Feds Daily says we must remain. Just to repeat that there, Feds Daily says we must remain resolute, committed to the 2% inflation goal, It says global headwinds lagging impact of Fed rate hikes also factors in setting policy, and says the Fed must monitor tightening credit conditions in determining path of rates. It says the US economy remains strong and labor markets extremely tight. It says the Fed is prepared to use all tools for any size bank to help to keep the system safe and sound. Fed's Daily says the US banking system is sound and resilient, and says we are committed to ensuring all deposits are safe.
I put some more on just then.
Fed's Daily says the strength of the US economy and elevated
412C.
inflation suggests more work to do on rate hikes, and says she sees good reasons that the economy may keep slowing even without further rate hikes.
It's interesting here. You're getting the Fed pause trade right on minutes, and then you're also getting Goldman Sachs saying two important things. Goldman Sachs saying no longer anticipating a Fed rate increase in June, and that they're
Fed's Daily says there's some time likely needed to see the full impact of hikes. And Fed's Daily says there's also good reasons to think more tightening is needed.
you're seeing.
And Fed's Daily says the job market's still tight, but signs show it's starting to cool.
Let me bring that chart up for you guys. Bring up a chart here in the background. Promised you guys that chart today. No, I didn't want the PE ratio. All right, I'm about to set this up in the background here. It's going to take me a minute here. Close that up. SPX. So you've got the pricing in of a pause, right? Rate pause pricing into the minutes today. Goldman Sachs, funnily enough, is saying two things. I like how they worded it. They said today, Goldman Sachs no longer anticipates a Fed rate increase in June. That's a pause, right? They're also saying that they're forecasting a quarter point Fed rate increase in May. So you've got likely talk of a pause, or hey, we're going to be more tactful, or however they fucking word it, that they're going to be supportive of markets to some extent, if that's the case of a pause, or we'll wait and see, blah blah blah, the normal stuff, right? And Goldman Sachs is kind of saying that same thing. They're saying, too, that it continues to forecast a quarter point rate increase in May. No longer anticipates a Fed rate increase in June. And that's that pause trade. What is that pause trade is the question. Hey, thanks, Nick, man. Appreciate it. You supporting the stream, brother. QQQ's death kiss from Kramer. So here we go. So I'm gonna build something in the background for you guys. You guys want me to just do this with you? I can do this with you. See you guys. We have some time. It's 12:05 right now. If you're a bull, you're looking for a confirmation trade higher.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Looking for price to come down and test here and grind higher. What you don't want to do is get caught in a sideways trade here. And this would be a sideways trade into the 2 o'clock hour. This is where you're going to grind all your profits down. If you're looking for taking some profit, if you're looking to take some profit and re-enter, I'm long right now, just so if you guys want to know. But if you see us start to get caught in this trade here, I don't blame you for taking some profit off and re-entering as we come into the 2 o'clock hour. If you're looking for confirmation, you look for a rejection above here at 410.97, and then you'll end up seeing some kind of a trade lower and the dollar sign confirmation for taking a trade up into that 412.23 with less risk on the trade. I'm going to build something with you guys that are with me right now so you can do this on your own. I've done this before. I've done this before with you guys, and I want you guys to be able to do it on your own so that you can be, making your own decisions for what a lot of people sell you, the narrative that gets sold to you, the shit that you guys pay for out there. Fucking $300 a month, $500 a month, $1,000 a month. The fees that you pay people. We'll see if we can build one of these together here. So we're gonna take a quick interlude here from watching this chart right now. We're just gonna build this together. So we're gonna bring this up here. So if you've got TradingView at home, you got TradingView, make yourself an SPX chart, put it on a daily. We'll probably switch it to the weekly here in just a moment. But if you're at home, just bring up an SPX chart. And then in the top left-hand side, you'll see a little plus symbol here. You just click this plus symbol here. And we'll bring up a bunch of this stuff, but we're going to bring up the Fed funds rate. You can see it here, Fed funds. And we're going to click on new pane for it. It's the Fed funds rate right there. We're going to bring up the unemployment rate. We'll do a new pane for that one. Not the unemployment level, the unemployment rate. It's an important note there. Then you want to bring up the United States inflation rate year over year. It's USIRYY. Bring that one up in a new pane right there. Maybe we can just bring up the yield. I think I can. Oh, there we go. No, it's the 10-year yield. Let me see if I can. I don't know how to bring up the 10s and 2s. New pane, 10-year. See if I can figure this out. Can I think I can do this minus. No, I can't do the minus there. Can I? Can I do minus? Yeah, I don't know what I'm doing wrong here. So you can figure that out on the other side. Let's start with that one. Let's start with these two right here. Keep it simple right now. Now the anticipation of a pause. I'll bring the 10s and 2s here in just a minute. Let's start with this. This is SPX. We'll keep this simple here. Anticipation of a rate pause. We'll start with that one. This is the Fed funds rate right here. Here's a pause. This lasted from January to June of 2019. Inflation's coming down over here, right? This is the unemployment rate, right? Still coming down in this time period. So we're looking for unemployment to be coming down, inflation to be coming down. Look at that grind higher that we have right there. Fed funds rate pause. Pricing it in. Front running it. Here's another one right here. And I'll bring up the 10s, and the 10s and 2s are going to be important here. Grind higher. This one, not so much, right? Ground higher. This is why I want to bring up the 10s and 2s for you. Inflation's still rising right here, right? We're going to have some expectation of inflation continuing to rise right here, right? We know that inflation is likely going to continue to rise. We know we should see a spike in inflation due to being supportive of markets, not being above the rate of inflation currently. Flattening here. Rising market. Pause. Rising market. Pause, right? But watch this. Rate cut, we go down. Right? We're still in a high rate, though, on this Fed funds rate right here. Grind sideways and up. Even the low down here isn't a new low, is it? This low and this low, what is that? 320, 345? Somewhere in there. Let's look at a weekly. Another one right here, grinding sideways. And even when we did pull back, the low wasn't the low that we were looking for here, was it? Inflation rate, not a big mover, right, for the market. What's consistent in here? The pause? Nah. What is consistent here with the market rolling over, though? Do we know what that is? It's this one right here. It's the unemployment rate. You can see it right here. See that spike in the unemployment rate? The only consistent one that I can see. See that crash right there? Unemployment rate through the roof. Where do I see the consistent market rolling over, bloodbath? Unemployment rate. Going crazy. Consistency. I'm looking for consistency here, right? Where do I see the rollover? The unemployment rate rising. Market rolling lower. Right? What about this one right here? Look at that one right there. Market rolling over. And even on this one, we didn't get to a new low, did we? This is 1990. Unemployment rate rising. More consistent than Fed funds rate, right? For market crash we're talking about. Right? Look at this one right here. This is back in 81. Unemployment rate. Initially, we grind higher. We actually saw a low on the initial one. Saw a crash on the initial push. Employment rate came back down. Grinded higher. But then we got another low right here. But this is the unemployment rate going higher again. It's not the Fed rate cuts, is it? This one right here. Unemployment rate screaming higher. Right? Market rolling over to new huge lows down here. Not so much. Not so much. Get it right here. Unemployment rate going higher. Right? Unemployment rate going higher. Big one right here. 69. Right? Same thing, or not so much the same thing back here, right? Fed fund rate, though, climbing. Right? No new lows here. Fed fund rate climbing. This is back when we have the 50s and 60s, right? So back here we've got Fed funds rate Crank the rates, pause them.
Denoting WTI crude oil rising around $2.
New market
so
lows,
hitting
not a crash though,
$82.12.
right?
This would be the highest
Pause them,
closing
crank
price
up the
in
rates
nearly 5
again,
months.
right? Market trades sideways into the right. Crank unemployment rate skyrockets. Still, these lows aren't crashes though, are they? This is the no landing scenario. This is the 3,200, 3,400 scenario, right? Unemployment rate coming back down. Market explodes higher. Do you see that? This is the 50s, 60s, right? Notice these lows are higher lows. They're not crazy, right? If you didn't buy in 62, once the time we got to 74, you still didn't have that low. These are buyable dips in the market. You see these? 1950s, 60s, 70s. This is implying that any lows that we have in the market, if we go back to that system, into that you'd trade like this if we extend this, right? We'd trade it to the right and up over years, 5 years, 10 years. I don't think we do this shit, but if we were to do it, you're not going to expect the market to crash. Now, unemployment rate on its own, is that showing a crash right now? Do you guys see an unemployment rate? I don't see an unemployment rate crash here. Do you? I'm not seeing it right here. I'm not seeing the unemployment rate careen out of control, right? Remember the Fed saying their main job is to maintain a high rate of employment. So am I seeing a crash right now in the market is the question. I'm going to do the 10s and 2s here for a minute for you, because I know you guys are all harping on that too. Let me clear this out real quick. Remove these drawings. So I'm not seeing it. I'm not seeing a consistent answer just based on inflation, Fed funds rate, unemployment. The only consistent crash scenario that I see, like crash, not we're trading down to 3,400, not we're trading down to 30. Hold on, let me put this back up. Not we're trading down to 3,200, 3,400. I'm talking like 2,800, 2,400, 1,600, 1,800. Like doom and gloom, collapse bears. I don't see it unless unemployment's coming up. And we haven't seen unemployment just start ramping, right? This is where all the mechanics of the market, the business cycle, the economic cycle, none of that is matching up to COVID. And that's my other funny thing. People out there are like, well, I'm gonna compare this chart to every other downturn, but not COVID. And I'm like, why are you not doing COVID in this? Everything right now is against COVID. This whole fucking trade involves the COVID trade. So if you're like, if you're like, hey, we're gonna talk about how the normal cycle works, I'm like, yeah, I get the normal cycle. But we're not in a normal cycle. We weren't in a normal rip in the market either. So none of the function, none of like if you look at like an engine in all of this, the economy, the macro, the stock market, the bond market, all this shit, none of it's really running on its normal cylinders, right? The pistons aren't running, the pumps aren't running, the belts aren't running all in the same system like they normally do. So we're still not seeing the unemployment rate going crazy right now, right?
It says we have tools for monetary policy and financial stability, and they don't compete with each other.
So for right now, if you're looking for that trade, I don't see it. Now you guys all talk about the inverted yield curve.
Fed Daily says I
See if we can
expect
bring this up.
inflation to end 2023 a little above 3%. And Fed's Daily says inflation expectations are anchored and allowing us to take a couple of years to bring down inflation. And Fed's Daily says policy tightening is at a point now where we don't expect to continue to raise rates every meeting. So that's Fed's Daily saying policy tightening is at a point now where we don't expect to continue raising rates every meeting. There is a sense that we will get rates up to a level and stay.
Same pricing still, maybe? We do that one here.
And Fed's Daily does say, though, I don't want to forecast the end of a tightening cycle.
Let's bring up the regular chart here. 10-year. Just forget. There we go. Minus 2. Oh, yeah, baby.
Fed's Daily does say we had good news today on inflation. And Fed's Daily says we will look in CPI inflation to see if core services ex housing are coming down. Says the CPI release showed good news but is still elevated. Fed's Daily says we are getting signs of a cooling in the labour markets, but again, we're not there yet.
I think I'm bring this up back up for you here for a minute. You know, for some reason, my brain can't figure out how to put this in a different scale right now. But whatever, it doesn't matter. This is the SPX, S&P 500. This is on a weekly. Yield curve. So I got SPX down below here. You can't see it, but this is where my cursor is. This is SPX down here. Maybe I can move this up. In the front, move to existing and pane above. No. SPX.
Fed's Daily says there's a lot of uncertainty about how long it takes for rate hikes to impact the economy.
So let's take a look right now at this general idea here. So I want you to see, so this is SPX down below, just time frame wise, okay? And let's look at the yield curve here. So we've got the yield curve right above, okay? What I want you to see is on a time frame. let's
Fed
talk about
Daily says
time
there's a lot
frames
more
here.
in the
So we've got the
pipeline of
yield
monetary
curve here.
policy
Everyone's like,
tightening.
it's going to go straight north. And I'm like, maybe not. This is 2004 or 24. This is a year from now. Yield curve can trade sideways and up for some time frame, right? Here's the yield curve back here. This is February of 2006 into July, and even over here into October of 2007. You can actually see right here, we grind sideways and up. If you look, following my cursor, you'll see the market grind sideways and up and doesn't begin to actually roll over until the yield curve really starts to blast. So the yield curve is up here, and then it's actually starting to peak above. So if you're trying to be like, yeah, the yield curve, man, yield curve is going to do it. Yield curve is going to crash this market over. Historically, the yield curve does not actually translate. Well, here we go. We got an example here in 2000 where it did, but this is the start of the rollover in 2000, right? See how the yield curve didn't really play a part in the rollover in 2000, right? We began to roll over due to the unemployment rate. So the yield curve kind of did its own thing. See how you can't really trust the yield curve is my point. You can't trust it. Now you're going to get bears out there. They're going to tell you, well, we're just at the start of the crash. And I'm like, nah, you guys already tried to say we came down here at this point. The yield curve hadn't already come up at this point. So the yield curve is kind of an inaccurate representation of, yeah, the yield curve is how we're going to find out when and if the market crashes. Same thing back here. This is 1990. Yield curve raising over here, right? You can see it right here. Yield curve. See how it's going up right now? And the market peaks and rolls over, right? We get no rollover here, and then all of a sudden we get a rollover down here. Can't really rely upon it, can you? 2s and 10s, 10s and 2s. Can't rely upon 10s and 2s. You see it blasting up here, right? Watch it blast up here, and the market is coming up as it blasts up. So I guess my point by the 10 and 2 to you is that you can't trust it as a reliable indicator of the market going higher or lower. And a lot of people here will say to you, well, if the 10s and 2s come up, you should expect a market crash. And I'm like, if you did, it wouldn't even be until the 10s and 2s are way up here. That still says to me that this year alone, we will likely go higher. You okay? You going to do some lunch? So my point here is that 10s and 2s are not going to be the signifier for you for market crash, market doom. If you look back historically on the S&P 500, it's a poor indicator for when the market crashes. The best indicator for when the market crashes, as we all know, is definitely when the unemployment rate matches up with the 10s and 2s. So what are you looking for now? You're looking for the 10s and 2s to rise with the 10s and 2s. Unemployment rate to rise with the 10s and 2s. So until you see the unemployment rate go up, the 10s and 2s on their own do not make sense. And I think that was my comment on...
Fed's Daily says when credit conditions tighten, it puts the brakes on the economy so the Fed doesn't have to tighten anymore.
On FinTwit. On FinTwit, I had said to you, 10s and 2s really don't tell you on their own that the market is going to go up or down. If you look at the...
I want banks to recalibrate lending to the economic outlook.
If you look at the 10s and 2s on their own, they're a poor indicator for where the market goes. So if you're a bear and you want that collapse in the market, what do you want to see?
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
At least for macro reasons, you want to see the Fed funds rate, or excuse me, the Fed funds rate not pause, not continue to raise rates. You want to see the Fed funds rate be cut, right? Rates being cut. You want to see that Fed fund rate being cut once the rate of inflation is lower than the Fed fund rate as well, right? You want to see the Fed funds rate go above the rate of inflation. You want to see inflation truly come down. I want you to know that because the Fed balance sheet has been higher, that we're not above the federal fund, the rate of inflation, right? And you're probably going to see a spike inflation. You also know that because they're not above the rate of inflation in rates, that the money is worth less. It's worth less over time. We're not seeing the unemployment rate screaming out of control right now. And we're not seeing inflation coming down drastically. So what does the 10s and 2s mean? Nothing. It means that rich people are probably long bonds and want to get paid. That's what they want to do. They want to get paid. They're long, high-quality bonds, and they want it today. That's all it means. It's some human that wants paid in the bond market. That's all it means. Oh, yeah, baby. Trading 32 cents right now. That's all it means. And the fly in the ointment right now is the Fed is effing over. See, I didn't swear that time. Effing over bond buyers. High-quality bond buyers. They did not expect. I don't believe for a minute that they expected the Fed to support regional banks. I think if we have a commercial-backed real estate loans, right? If we have a crisis there, we got to bail out the people that own commercial buildings in downtown LA and New York, and we're going to support them. That's a fly in the ointment for the bond market. We're going to pause rates. That's a fly in the ointment for the bond market. We're going to talk about it. Fly in the ointment. We're not going to cut rates, and we're probably going to increase rates 25 BPS next month, and then we'll pause it for the rest of summer. None of that jives. None of what I just said jives at all with what a bear wants to hear. A bear wants to hear we're above the rate of inflation with rates. We are blasting these companies and they're failing. We have mass unemployment. You guys getting the picture here? Right? The Fed must cut rates because they've done too much damage that we haven't seen yet. Until you see that stuff, the 10s and 2s don't mean shit. They don't mean shit on their own. And so if you're a bull or a bear, bulls want a bottom too. It's not just bears that want to see a market crash. We want to see that bottom too. But we're not seeing it, are we? We're seeing a supportive Fed that's telling you that the bottom is likely in, even if we trade down to 320. It's close enough in horseshoes and hand grenades. And they're going to be supportive of the market as they do their operations. They'll pause and they'll add and they'll pause, and you're going to have to play ball and suffer through it all. And the worst part about all of this is likely down the road, two things are working against you. And that is that you're eventually just going to fucking my daughter's not here right now. You're just going to accept eggs are $6 and you're going to have politics come into the stock market, and you're going to get somebody running for office, and they're going to tell you some other stupid shit like, hey, we're going to get everybody making $25 an hour. We're going to make the rich people get rich again. We're going to roll back all these tax programs. And you're going to be then what? You're going to now make if you're working at McDonald's, you're going to make $30 an hour. And they're going to take taxes off the rich, and the market's going to move on, and you're going to be robbed, and the fraud's going to go on. The fraud's going to continue. The modern monetary theory is going to slip back into the system, and they're going to snort the cocaine and all that kind of stuff, and you're going to rage as it happens. That is likely what is going to happen. She's not in here. She's gone. She's upstairs. She's making herself a sandwich right now. Thanks for saying something. She's not in the room at the moment, so I could swear. You get my point, though? Hopefully you get my point. So what does that lead us back to? That leads us back to, do we get the sell in May? Probably. Is it going to be end of the world? Probably not. Does it give another dip for a bull to buy? Probably yes. Have we seen mass unemployment figures? No. And I don't care. I don't care what, like, I was reading a story the other day where people, they're like, they get the chalkboard out and the arrows going and they're like, well, this is the real unemployment rate. And they're like, this is the real inflation rate. And I'm like, yeah, you know what? These guys and these women in the Fed don't care about your chart. They don't care. They don't care. They want mass you need to see mass unemployment. You need to see wage stagflation, inflation raging. You're not seeing it. Kaido's asking, how come I'm very delayed on your end? You should be able to go right down to you should go right down into your preferences cog and you just click on it.
Feds Daily says most likely there will be no recession.
Speed up
Feds
playback
Daily
and you should
saying
be real
most
time with
likely
me.
there will
Twitch
be
has a
no
5-second
recession.
delay. You can always go to Twitch and watch me there. Hit that playback speed, baby. Oh, you know, I'll have her sing that. When she comes back, I'll have her sing that. What a bear wants, what a bear needs. You can always take the 2 trades here. You can take both of these trades right where we are. You can take a straddle or a strangle. Take both sides of these trades, manage both sides. Easily. One of my favorite trades on Ventes. See, I'm not seeing it. I don't know where like, at least macro wise, I'm not seeing the trade that everybody's talking about. At least from a macro perspective. So if I can't see it with macro stuff, well, if I can't see it with the inverted yield curve, like consistently, I can't consistently say, yeah, if the yield curve goes up, the market's going to crash. Yeah, I can't time the yield curve going up, or at least not on a month-to-month, 3-month projection,
Feds
6-month
Daily says, I don't see a
projection. Can't
pattern
see it.
forming yet in which
Not
bank lending
consistently.
is contracting.
Can't see it with where the unemployment rate is right now. Now, that's the most consistent way to see it. With all of it combined, I can't see it right now. Can't see that like this is the top. We're going to crash tomorrow. I mean crash, not we're pulling back. Not we're going to trade down to 3,200. I mean like the second leg down that everybody talks about. I can't see that right now. This looks like the environment of buy a dip. That's what it looks like. Do I make any money off of YouTube or Twitch? No. I make YouTube and Twitch. I make minimal, $30 a month, something like that. 20. I'd do better with recorded videos. I'd make a lot of money if I did recorded videos. And I haven't done any sponsorships. This is completely everything that we do is completely community supported. So no, and I've been doing this for a long time now. It's cost a lot of money not to do. So this is completely community supported. The Holy Croissant is saying you can click low latency mode also in Twitch and you'll get less than a second delay. Thanks for the heads up, the Holy Croissant. Yeah, no, Brian. I'm trying to do. We're rolling out a website right now.
The economy is going to slow quite substantially.
I'm hoping to monetize this, where you can get buy for free if you want to, and there's a paid option. But we're very close. We're like Piquito, very, very close. It has to get monetized at some point, otherwise I can't keep doing what I do. It's been I'm getting crispy. I'm getting to that point where it's impacting my my private life, and it's impacted trading too. It's impacted trading, private life, all that kind of stuff. So it has to at some point like grow into something self-sustainable, or probably needs to end at some point. So it's gonna be one or the other. Yeah. No, it's I've had sponsor offers. The stream will change if we do that stuff. The stream will change. Like you end up getting like a diluted version of me, and then you'll end up getting less and less conviction. You'll get if this then that, or these are the three options that we can do here. So you'll lose some of the teeth.
Commentary from Moody's says the baseline US macro forecast is unchanged, but the outlook is now more uncertain.
Yeah, I love you guys. I love being here. It's not that I don't love you guys. I love all you guys more than the entire world.
Sponsored by TickStrike.
We're just at that place, We're right at that place where
Forex and stock instruments.
We need to like make that move up or scale it way back. So we're working on it in the background. It costs money, time, and all that other kind of stuff to get there. So we're kind of there. So I appreciate you asking. Thanks for asking. Croissant means crescent moon, the symbol of the Ottomans. No sense of her capitalist daughters in the room. Should I keep her in here more frequently? I can do that. We'll end up turning her into a market practitioner at 10 years old. That would be bad, right? They'll make like a documentary on her one day down the road. They'd be like, we actually have video of when she was 8 or 9 years old, sitting with her old man all day long for 10 years. I love all of you guys too.
Some more commentary from Moody's on the US economy says the recent banking stress is likely to add to the financial tightening that was already underway.
The holy croissant is French. Right on. Did you guys hear the song that I posted on FinTwit this morning? I thought that was funny. Is it possible to set up SpyStream? To set up the SpyStream and walk away on your days off.
Can get inflation down.
It is and it isn't. That's a good question. So some mornings I have the opportunity. This past week I have not. We have been up and out of the house in the mornings at like 6:37 in the morning. So it's like we've dodging and weave. It's like an hour I've had to take to set up the stream for you every day. But I want to get to that point that I can for you, but not quite right now. But yes, we are working on that. I do actually have someone that I'm trying to teach to turn the stream on for me. The issue is that if I can't do it myself, it's not being set up properly.
Moody's adding that as long as systemic risks moderates, additional negative impact on US GDP growth from the recent banking stress will likely be modest.
Hey, Super Masters, how you doing, man? No, we're gonna keep it going. Don't worry, no, it's all good. In the background, we got a lot of stuff going on in the background for you guys. It's not ending, so it'll all be good. We'll be here. I promise. Yeah, her mother today is going to be upset. She probably. It's no. So on no. This is YouTube, right? Winky, YouTube. And I haven't checked Twitch to see what that is right now, but I will look. Twitch I haven't checked. Twitch doesn't. If they do send me a check, I don't know if I've received it or not. But YouTube I haven't seen nothing. YouTube's like all the advertising on YouTube's like $30 or something. I'll look right now. Take a look right now and see what it was. And it's the structure of the videos because they're live streams. If they were like a 20-minute, 30-minute video every night, people would go back and watch them. Take a look right now and look. Yeah, it's not a check. It's like a. I think Twitch actually sends a check. They give you the option. I think they actually give you that option. I think it comes, but it comes through like every 2 months or something. Or they ban you if you show analytics on stream. Okay, I didn't know that. All right, maybe I won't show analytics. Let's see if we can check YouTube. That's the other thing. YouTube like mixes ad revenue and
Daily
tips.
says, I'm not optimistic about Labour participation growing further.
Yeah, they kind of like. Yeah, see they. See here. Actually, it's higher. So watch page ads was $147 for the last month. They estimated $147. It's actually much higher than it used to be. Quite impressed on that. Quite impressed that it's actually gone up. That's good. I guess I am doing better. Maybe I'm not paying attention. Maybe I need to pay more attention. Haven't been able to monetize shorts on YouTube. Yeah, I haven't. So I've got 2 guys working on doing shorts so that we can clip live streams and then start to post them. It's just a matter of getting there and doing it. All the pieces are there. So ASVP 19, all the pieces are there to monetize. We just haven't monetized at this point. Squeezing higher now. 412C is only trading 33 cents currently, even on that squeeze. So not too great right now. 1 minute chart bullish right now. 5 minute chart. Yeah, Pinky, I gotta call you. Nice big green ball right there. 5 minutes looking nice and bullish here. Hourly is being respected. We have the confirmation trade for a bullish trade higher so far. Have that nice squeeze up, 1, 2. Looking to maintain price higher. Watch that 1 minute. And the 5 minute trade above here. Give me just 2 minutes here. It's 12:48. Give me just 5 minutes. I want you to know that I am long calls. I have to take my daughter is getting herself lunch, and she's been gone for like 5 minutes, 10 minutes. So I just want to make sure that she's being successful in her endeavor here. Does 3-trigger cluster matter today? It does, and it doesn't. Macro news matters most today. I want you to know that. Today is the day for the Fed minutes. That is the most critical part to today. Good question, Uncle JBJ. Give me just 1 moment here. And I'm gonna go check on my daughter really quickly. Hey, thanks, Wesley. I appreciate it. I appreciate it, Wesley. Is it Weesey? Weesey. I appreciate it, Weesey. Yeah, I'll be right back. Give me like 2 minutes. I'll be right back. Just 2 minutes. Usually if I step away, the market squeezes, so hopefully that happens again right now. Trying to gift subs, but keep running into issues with Twitch payment can't be processed. Uh-oh. I'll have to check. Let me see if Wiki can help out with that. Saying the Holy Croissant saying keep trying to gift subs, but keeps running into issues with Twitch payment can't be processed. Hold on one
We
second. I'll
are
be right
now
back.
10 minutes away from the top of the hour. We do have the US selling $32 billion in 10-year notes. So the prior bid to cover was
I saw that, Chaz.
2.35 over the prior high yield of 3.985%. So just looking at an auction preview ahead of this. So JP Morgan strategists see the auction as requiring further concession from Tuesday's closing level, given rich valuations and weak risk appetite. So against the curve, the 2's10 spread is steeper by around 1.5 basis points on the day, but inversion has deepened from around negative 40 basis points over the past week, which may deter relative value participation. So between CPI, which may have affected the auction setup, and ahead of the 2 p.m. Fed minutes release, the auction faces significant event risk that may also sideline some investors. So look into the latest CFTC positioning data shows that speculators were net short 621,000 10-year note contracts and net short 186,000 ultra 10-year note contracts. Also look into the primary dealers position in the 7 to 11-year sector. Was net long $4.4 billion in the week ending March 29th. That is the biggest seen since September. And that is against the $1.6 billion average net short over the past year. So again, $4.4 billion net long in the last week. 1.6 billion net short is the average over the year. So in a semaphore event, White House's Brainard says the US banking system is stable, sound, and well capitalized.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Fresh out of the Fed.
All right, I'm back. I went and checked on my daughter. I promise you, I fed her, made her a sandwich. I was like, "What are you eating for lunch?" And she said, "Cheez-Its." And I said, "How about a banana or an apple?" And I make you a sandwich.
The top of the hour. Again, the US is selling $32 billion in 10-year notes. The prior
She
dip
said
cover
that
was
sounds good, Daddy.
3.35 with the prior high yield of 3.985%. Also seeing more comments from White House Economic Advisor Brainard. Says banks are shoring up their balance sheets.
Couple different places to look at above. Let's keep hovering around like 2, 3, 4, 5 pennies. See if we see any liquidity above.
White House Economic Advisor Brainard adds that deposit outflows have stabilized.
Man, I will say this, dude. Like normally I'd say, like, I'm in long calls here, but man, I want to take that put side so fucking bad. I want to take it so bad because there's nobody on the trade. Trading 34 cents right now. Like the trader senses inside of me. the trader inside of me is like, take that put trade into the actual rate decision or minutes discussion. It really is. Yeah, you notice that I have to switch back to so who said that? Chris is like, I love the language today. Keep your daughter around. Because I have to switch to like the Mr. Dad. You have to be Mr. Dad. I'm like, hello, young kids. How do you do? Oh, is it hello, fellow kids? Yeah, there's like, there's probably two parts to this trade. There's probably
We're shortly expecting the results for the US 10-year notes auction, where I'll be leading with the bid to cover ratio. Worth noting, we do get the Treasury pre-sale when issued at the top of the hour.
there's like some kind of a put trade in here. I don't know at least time wise. I like the I've got issues here. My issues here today are twofold. One, the options market is kind of range bound, right? It's my first issue. That the market is kind of range bound right now. I have an issue with that. Where's 2 o'clock? Right here. So here's the 2 o'clock hour right here, right? There's like this. My idea here is that there'd be a failure to print.
3.435%. So that's the Treasury when issued on the
We
10-year yield,
bloodbath this down here.
3.435% ahead
I
of the
just don't know
$32
when to
billion
buy
auction.
them. I don't know if it's here. I don't know if it's if it's here. I don't know where it is. What I want to, because what I'm trying to do here is I'm trying to think through the event vol coming off that trade, right? Volatility comes off the trade. We squeeze higher, but if we
Economic advisor Brainard says we are seeing inflation coming down, but we do still have more work to do.
no, you're not. You're not seeing inflation coming down. You're not. You're going to see a spike in inflation. We already know that. I like the. I guess. I like the idea of the vol coming off the event into 2:00. So staying in this trade, but where is the roll? I think there's a roll today. Is my point. At some point, at 2 p.m. or 2:05, 2:15, I think there is a trade lower. So I think it's there. Yeah, I'm still in calls. I think the trade lower is there, and it's all just based on the options market. If you got some news, you'd have to get some news inside of that release where there's a ramped call buying, but
3.455%. A bid to cover ratio 2 to 36, 2 to 36.
oh, I got to respond to something.
So noting the Treasury 10-year yield advances to 3.45% after the auction sales.
Chase Winters saying, Cap, let's talk XLF. Big earnings Friday and large amounts of puts following Friday OPEX. It's not horrible. They could run. Yeah, Winky's been talking about the XLF trade now for, what now? 3 weeks, 4 weeks. We've traded underlying tickers in there over the past month. And our supposition was on XLF earnings, on bank earnings, was that if you sell into bank earnings, that the 7 to 9 sessions, so if you're selling into bank earnings, 7 to 9 sessions before bank earnings, you would expect it to be bought.
Brainard says the U.S. economy is remarkably resilient.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Oh, you're still in the calls? Right on. Yeah. So I think our conversation was, if you sell into This doesn't apply for every earnings. Bank earnings specifically. If they're bought into earnings, we tend to sell them. If we sell into bank earnings, we tend to buy into the last 7 to 9 sessions. The real move, though, likely won't come until after. The other issue with bank earnings is sometimes when they hit, they'll sell off by open. So you need your calls to be a month or two out. So if you get the real move higher afterwards, you're not getting wrecked either. What dates are you, what dates? Tell me your calls aren't for like the week of earnings. If they are, I'll warn you of this. If your calls are, well, and this isn't guaranteed, but there's 2 trades typically in earnings for this kind of a trade. You would trade let's say you take a trade into it. Let's say you're like, okay, well, we're selling banks in earnings. And then you're like, okay, I'm going to buy the dip for the ramp into earnings for like those 7 to 9 sessions, 2 weeks before earnings, right? So you take that trade. Oh, yeah, baby. Squeeze it. So you take that trade, right? You close that trade heading into earnings, their actual earning days. Take the money and run. If they're dated for like that week or the week after, you just take the money and run. And what you get a bunch of reasons, right? You're gonna lose the IV. You're gonna lose the event vol, all that kind of stuff. The other reason would be that oftentimes if they do squeeze up, if you're not long underlying, those gains will be taken. The next day we'll open on the low and then work our way higher into the next expiry. So there's like a second trade where you can enter bank earnings thereafter, or you do the spreads, or you time them farther out, like a month, 2 months away, and then you have to worry about any of that nonsense that takes place the day of earnings. So you either have to structure it into 2 trades, or you have to, if you own if I own the underlying on a bank stock, the actual physical, I would be looking for like a take the money and run that early morning or that night before, whenever they report. And then it would be a second trade to go higher or lower. Squeezing higher now. If you're long calls, congratulations. 412C's now printing 35 cents. Does that make sense to you guys? Well, that would be like the standard. And I mean buying earnings like months before, like a month, 2 months before. Does that make sense? These trades already started a while ago. Trading 411.06, 411.09. As a matter of fact, Winky and I are both in IWM. Hey, by the way, Winky, my calls are not that far away. I think we're in the same price on our calls on IWM. In that trade, so we're both in IWM calls, and they're far dated, and they're in anticipation of small cap
White
earnings.
House Economic Advisor Brainard says, "I am
That's
ready
the
to have
that's
a
the trigger.
conversation about the budget."
There you go, 411.02, baby. Just keep on pumping, baby. Keep on squeezing. Yeah, I'm a little higher than you. I'm at 196s, man. I'm still a little higher than you. Mine are still a little bit more out of the money than yours. I'm not looking to hold them up till we get there either. I'm just looking to capture all that premium heading into small cap earnings. I'm trying to capture the event or the earnings vol and all that kind of shit. Yeah, I've got the 630s too. Keep on squeezing right now. Give me that 411.17. Keep on pumping. Keep on pumping. Keep on pumping away. Keep on pumping. Put the pump on. Get that event vol off the market. You know what they're gonna say, and I do too. Our only problem today, our only real problem today is that the options market, we need the bulls to buy a bunch of crap that's out of the money. We need the bulls to be buying 415 and 420 for us to trade up there. We need these bulls to believe we're going to the moon. We need range expansion in the options market, or else we're going to get turned around on the high, baby. That's what's going to happen. Now trading 43 cents on 412C. You can always take the money and run whenever you like. Look at the pump, baby. It's 411.39. Everybody's telegraphed to you. Nick Timmeros. Another fair point we talked about. Nick Timmeros last week told you that the Fed is telegraphing to you what it's doing. Nick Timmeros has been firing off. Now, I know I haven't live streamed the past few sessions, but when I haven't been live streaming, Timmeros coming out at key moments in this market and straight point blank telling you, expect a discussion about a pause in the minutes. Expect the Fed to be more tactful in how it applies rate increases. He didn't say, "Oh, we're going to cut rates." He said, "Look for some pause talk, and look for some more strategic raises in the future, not just bam, 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 bam." June 30th, trading 411.35. IWM had a lot of work to do.
Futures rising by $2 a barrel to a session high of around $83.53.
I didn't want to get involved in so just look at this right here. Think of this like IWM. This chart right here is just like IWM. A lot of work, a lot of danger, a lot of work, a lot of consolidation, up, down, up, down. This last little part right here should be a nice fat squeeze. I want that part of the trade in IWM. If you open up an IWM daily chart, look at a daily chart in IWM. It looks just like this. Just like this. And this is pretty much where we are with IWM right there. So I don't want to get involved in all this and get torn up and repriced and all this other nonsense. I want to capture this part of the move right here. $4.12C now trading 47 cents. In the money, baby. I like that. I like that, Omar. 411.44, 411.33. Trading 48 cents. I'm going to take some money off up here soon. Start looking to take some money off above here. I'm reading, Winky, what you're posting right now, brother. Trading 46 cents. Should I sell for a medium loss? You could have added to your position down here to then make your position more profitable. I don't know what you're in for. So when options get repriced, there's one problem. So I do want you to, let's talk about that real quick. Sometimes we talk about this, but not all the time. So let's say you bought an option, a zero date. Let's see about an option.
Shortly expecting the results of the Fed reverse repo operation.
See about an option. Let's see about a 410. See about a 412C right here. And they cost $1. Later in the day when we get here, you're likely not going to see those, the base of these be $1, right? They'd be like 70 cents. Well, they'd be like 70 cents over here. Probably be 60 cents over here, right? Like a base case. 50 cents, 40 cents, 30 cents, 2 cents, or 20 cents, 10 cents, right? It'd be like their base case. So if you, let's say you're trapped over here and your thesis still holds up and it starts to come back, you can then take that $1 that you paid and pay like 60 cents or 50 cents and DCA, so you actually become a winning trader on this trade. Does that make sense? You will get paid if you bought at $1 here as an example, this is just as an example, you would come back and pay it if we went much, much higher, of course. But that's part of
106 counterparties take $2.304 trillion at the Fed reverse repo operation.
Scaling into a trade that's you're correct directionally, but not in timing.
This stream is sponsored by To The Tick.
At this point, your option is not DCA.
Profile levels by signing up
you should have DCA'd somewhere down in here at minimum. This is a pretty safe trade right here. This part of the trade is pretty safe. So you could have DCA'd wherever you're caught in over here. You should have added to your position here and then get directly out of your trade, which is what's happening right now. So what's happening right now is anyone that's caught here is selling. That's why you're seeing selling pressure here, is because you have trapped longs and they just want to get out. They just want out. They're like, I want out. I want to reposition myself for a better trade higher. Not the best way to make money. Typically, you DCA in here. You'd be up on the trade, making money, and then you'd be cutting it here, and then looking for a repositioning. And so that's what you likely see in here, is repositioning by longs that are trapped. And you'll see the same thing back over here too will happen again. You got some longs that are trapped in here. You got some probably have some kind of a long trapped in here as well. What am I buying puts? Right around here. I want to see that squeeze up, that vol come off, and then I want to grab some puts. Unless something material is said that we don't know. Thanks, Winky. Yeah, Winky, you want to comment on that? The Zur numbers? So Zaholi Croissant is saying, still amazed about Azure numbers when I don't know a single tech company in my space using Azure. Don't forget, we also have the Treasury budget coming out at 2 p.m. as well. Thursday, we have PPI and core PPI. PPI year over year. Core PPI year over year. Initial claims and continuing claims. A ton of all heading into tomorrow. And then on Friday, we have retail sales minus autos, import price index, plus minus fuels. Now we have Fed Waller speaking at 8:45 in the morning. Then we got industrial production at 9:15, capacity utilization at 9:15, and consumer sentiment at 10, and business inventories at 10. Yeah, Winky did a good job of explaining this to me as well. Last week he tried to explain this on the phone to me. Wow, they were giving it away. VV Avatar, how are you doing out there? Nice, right on, Omar. If you're just tuning in right now, I don't like there's a few things you need to know. I don't like the idea of the options market not being priced higher. Call expansion. Today. I don't like the idea that everybody's loaded to the tits and calls. I see the liquidity up above, so if you look on, I see this liquidity here and this liquidity here, and then this big band of liquidity above right here. No one's on the put side. We have some volatility coming into the market tomorrow morning. So my concern right now would be not having the fuel to rocket higher into or after the events much. So get the event vol come off, and maybe there's a reversal to the downside into tomorrow. So I'm looking for the event fall trade, but then I'm also more interested, rather than being, I'm not as interested personally. Normally I'm interested in, normally I'd say as long as news is good, well, I'd expect a rejection. A rejection off of the event vol just before, and then some kind of a pump higher into the bell. Normally, this is what I'd normally be expecting today, but for today, the way the options market is, I'm not so sure that we have the fuel that we need to keep going higher. I'm not positive on that. I don't like the fact that everybody's loaded to the tits on put calls here. Normally, when that happens, we either get some unexpected news, we blast down, or we just get a failure, just a failure to buy the calls that we need. So I'm actually looking for a put trade today. I'm looking for it, but not now. I'm looking for it once the event vol rolls off. So I'm hoping for like the initial push higher, and then to take some kind of a put position up here, somewhere up in here for tomorrow. Yeah, I see that 415 on the weekly. Yeah, Barry, for today, the weekly move or the daily move for today is 412. So I'm like, yeah, do we get like the pump off the event vol today, and then we sell down, and then we squeeze up into Friday? This is like the classic bear setup right here. I want to be careful of some weakness into the event. So this is a 1 minute chart right here. This chart is set up classically to roll. So you'll get some volatility into the event, and then the squeeze up higher. If you can't handle this roll, if it happens, just be aware that it is setting up.
There's just some commentary from the BlackRock CEO, Fink. He says, I see stickier inflation not going below 4% soon.
Yeah, we're getting close now, right? Almost half an hour. Just be conscious of any kind of a place to buy. A dip is likely down here. I want you to realize also that if we do get any bad news I want you to be very keenly aware here. We're going to go through the VIX really quick, but I want you to be very keenly aware here. Sometimes we squeeze right up into it. Sometimes we get selling pressure into the event with a dip to buy to go up higher here. And if we get any kind of bad news in this event, we start trading underneath this zone right here. We are going to be looking for some big lows. So be conscious of that. Be conscious of this previous low and this implied move down below. For the move lower, you're going to need a bunch of puts be bought to carry this low even farther down below this implied move. So you have a lot of mechanics working in the background here to the up and downside that need to be respected. We have the previous low on the day down here. If the news is not bad, I would expect any weakness to be followed by a dip buy to go higher. You see your implied moves on the daily here, and here. The options market is weighted to the call side. We are seeing some liquidity above. You can see it forming above my head over here to the top here. Right there, you can see it. Yeah, I like the idea of the vol crush trade up higher. Certainly, the squeeze higher is what I'm interested in. But then I'm looking for. I think the bears are going to step in and try to sell whatever comes out of this. I think they're up there waiting to sell above. If you want end of day today, we'll take a look at. How about this? At the end of the day today, we'll take a look at banking stocks. We'll look at some of the larger components of the banking sector, and we'll take a look at some of the beaten down that are coming back regional bank tickers, if you like. If you call them out to me, we'll look at them individually, so you guys can be prepared for those ERs coming up. You guys want to do that end of the day? Now trading 44 cents and 412 Cs. VIX bearish currently. Although it is at its same place that it gets bought. Or not same place. It's got a little bit more to go down. That's the thing about VIX right now, too. Is VIX has more so VIX can go down to like $18.25, but really what are we expecting for it to go to? The next level below, I believe, is 17.06. So if you got that rocket ship high, are likely going to sell it. So I'd be tempered in your expectations for the move higher today. I would say that any squeeze higher is likely going to get sold. Schwab. No, it's the flat trade. It's the grind sideways and up trade. You buy the dips, you sell the rips. We grind slowly up over time. 412C's trading 44 cents right now. Yeah, hey, don't, no, I'm long calls right here. I'm on calls. I'm gonna attempt to tactfully sell these calls and buy some puts. I have to be fast here. It's gonna be quick. I've already told you what I'm looking for. I'm looking for some kind of selling pressure above. I'm looking for the event vol come off trade higher. And then a swift reversal lower. Sell the news trade. Don't list which ones you want me to look at because they're gonna get lost in the chat. And what we'll do is we'll look at those trades end of day, and you can just input them on the chat, and I'll go through each one with you. It is fascinating here too because the higher we squeeze here, the VIX is gonna bloodbath. It does make me wonder. You know, it is the 12th of April. Is this the trigger for the selling into the 18th or the 21st where we get a squeeze higher, and this sets up the short trade for the third week of the month for OPEX, monthly OPEX? Was this the catalyst for it? Yeah. Trading 411.39. Yeah, I'm looking for some weakness into the 18th, 19th, 20th, somewhere in there into OPEX. Even in that weakness isn't like liquidation. It's just normal monthly end of month weakness on a very bullish month. Trading 411, 1242. 27 minutes left. Small double top here. If you're a bull and you don't want to get trapped, you can always take the money and run here. No shame in taking the money and running. Trading 46 cents right now. Make sure that you have a plan for where you want to take profit. You can always trade the reaction trade here. Sometimes you're just flat and you're looking for where to sell, right? BlackRock CEO Larry Fink is saying that he doesn't see how inflation is going to get below 4% anytime soon. I agree with that statement. I mean, if the Fed is talking about pausing and fucking 25 BPS every quarter or two, man, I mean, how do you chase inflation doing that? And if you're not chasing inflation fast enough, that means the market gets repriced higher, doesn't it? That's my experience with it. I mean, even if GDP comes down, but it still remains positive, the market, and we front ran the death of inflation, that didn't happen. Markets should reprice to the right and higher until we do. Or even come close to being above the rate of inflation. Fed's Daily also saying there's a lot more in the pipeline of monetary policy tightening. I don't know what he means by that. He's only got a few tools. Yeah, core housing's not coming down. We know that. I know core housing is not coming down. You know that core housing is not coming down. French President Macron is saying we have to avoid escalation in Indo-Pacific region. We are for the status quo on Taiwan issue. Position hasn't changed. That's also Macron. I got something cool for you guys to watch or read. Hang tight here. I got something cool for you guys. Any of you that are interested in, if any of you guys truly interested in Taiwan, the U.S., I'll post something for you here. You want to look up the Center for Strategic and International Studies. And you specifically want to look up a white paper that they did called The First Battle of the Next War, Wargaming a Chinese Invasion of Taiwan. I'm going to post you a link to... I had an hour and a half program on that on YouTube. And then what I'll do is I will I'll send you the white paper next. And then we'll talk about it. Here is a link to the web page to download the PDF, I believe. Don't hold me to that, but I think you can get, I think this is the link to the website. The last one is to their actual main website. The cool part about this is that it's a not unclassified wargaming. Unclassified wargaming for Taiwan and U.S. Now, I will tell you this. Now, this wargaming they did, or wargaming as it's done, I'm not as impressed with what they're saying about wargaming. Because they're like, the simulations that we ran, the U.S. won most of the war games, but not without major destruction to both China, Taiwan, and the U.S. specifically. The U.S.'s projection of power. And that actually is where Macron comes into the conversation. When you hear Macron talking right now, he's trying to position himself for more strength in NATO and in the European Union. So if you hear Macron talking right now, it has to do with if there was war with Taiwan, China, and the United States, the U.S. would not be able to project its influence like it normally does around the world. And so Macron's trying to position himself, believe it or not, as that person. So this should give you some idea of why you hear Macron talking the way that he does, and the reasons for it, the implications of why he's trying to put his hat into the ring with this stuff. Now, what I do want to warn you against with any kind of wargaming, war planning that you read out there. I was in the United States military and sat in those wargaming planning sessions on a very high level. And I'll tell you this. They honestly do not give a great they're good to know. It's never really what really happens. And what they fail to tell you, of course, on how do I word this? On unclassified wargaming, they don't show you some of the wargaming that takes place where and how we can and do lose. Though they do look at those in classified wargaming. Of course, they're not going to tell you how that happens, right? Or confirm what your beliefs are. So you can really only put like not quite a grain of salt. It's a good way to discuss and argue, to cite in your arguments with other people out there. But the truth is, for your own sanity, they're hard to really believe that is how war goes. But if you want a baseline, they're pretty good people too. They're a pretty good think tank, I should say, for what you can publicly see on the outside. Yeah, the Fed thinks they're going to get back to 2%. They are dreamers. Yeah, I agree. We're not looking like that, are we, Jimmy? We're not looking like that at all, man. I think that deal was broken. Kind of a dangerous situation. Been following for years. I have masters in Middle Eastern studies. I don't know if I've got my own. I mean, I've got thoughts I shouldn't talk about, but I do agree with a lot of what they're saying in that report. The things that I agree about in that report that they wrote. It's a nice, big, fat, long report too. Let me see if I can open that up somewhere. See if that is the actual download. Yeah, that is. So the download for the report. It's long. It's a read. It's a long read. It's 165 pages. But I agree with a lot of the assessment in the report. If we do go to war with China, it has to be fast. They take some liberties in this report. They took some liberties saying we'd lose. They automatically assumed we'd lose 2 carriers. They automatically assumed that we wouldn't have any help in Southeast Asia, Far East Asia, from other countries. So they've already kind of hand tied the U.S., but they don't talk about a lot of the other dangers. One of the major ones I see is fast boat attacks, stuff like that. Concerned with I wouldn't know if I'd call it guerrilla type warfare, but just you see, Iran does a good job of that stuff. You've seen some of our destroyers attacked in conventional ways. I think in one of the war games with Norway, I think it was Norway, one of the Scandinavian countries was able to circumvent a lot of our navy due to how large we are. But it does bring up the answer to that question of how do you combat that, and it's being swift in our actions with China. So I agree with that aspect of that report, that we have to be as aggressive as we were in World War II, or aggression like we haven't seen since World War II. But the one thing that report didn't address was the nuclear threat if we do take that course of action with China. And does that raise the nuclear threat? Because of how swift we'll have to be. So there's some danger there. Yeah, the fear with so Iran does a good job of working with what they have. They do a fairly good job of that, working with what they have. That's the one fear that I would have with China. But the way that you retaliate against that is use overwhelming force, like vicious. And you don't wait for let me wave the flag and call a truce. That report does a pretty good job. It talks a lot about arming Taiwan with land-to-land missiles that can reach Shanghai and places like that. I think that happens, Winky. I was on a call with Chaz one day, and I had said to Chaz, I said, if that war starts, you'll more than likely not only see that happen, what you're talking about, but you'd even see the United States turn into intranet or shut down with internet thereafter, with only approved new content on the internet. If that war starts, I would expect the internet to be shut off in the United States as well, at least briefly, and then maybe it'd be like a intranet where anything that's already there you can consume, and then it would only be approved content from that point forward. Yeah, I expect it to be if that war. So I have some expectations. If that war starts, it's going to be ruthless. The U.S. will be ruthless in there. It's not going to be like what you think it's going to be. It's not going to be like a buildup from the U.S. It's not where you see it. It's not. It's going to be like cut your legs off, as swift and as fast as possible. And likely all of those nations will be involved in that too. And you're going to then also assume that Israel does some shit, pulls some shit. Hey, thanks, Chase. I'll open that right now, brother. I'm going to bookmark it right now, my man. And I'm going to read it. I read it tonight. Thanks for posting that. There's a bunch of stuff that's not talked about. If we're that swift, I was telling Chaz, I said, if we go to war with China, you better pray that you have a Plex server at home. I'd be like, download some books and some audiobooks. It's like, because the U.S.'s first thing they're going to do is cut off our access from these nations to our own country, the infrastructure, our infrastructure. Be the first thing. A real true war with Russia, with China. Immediately you cut off the internet. To around the world. Yeah, I'm not no, I'm not afraid of the downloading. I'm afraid of our electrical infrastructure. I'm afraid of code being inserted into power plants, stuff like that. I'm afraid of the threat to our financial system, banking system, malicious code, that kind of stuff. And then my last fear would be the use of social media during the war to bend public opinion. I don't know. I don't know if I'm worried about the radiation. Yeah, that's what I thought too, Winky. I thought we'd just cut it in San Francisco. Can't we just do that?
Now 10 minutes away from the top of the hour. We do get the release of the US federal budget balance. Forecast is minus 314 billion. on the prior at minus 262 billion. Also get the FOMC meeting minutes for the March meeting.
I thought we just cut them at. There's an AT&T building in San Francisco, right, where all that stuff comes in or out. I thought we just cut it right there and be done with it, and then you'd have like an intranet, for all intensive purposes, like a U.S. internet. And then the only last part that I would say to that point would be if there's information leaking out of the United States from that point forward, right? So if I was on the internet here in the U.S. and I was a foreign national, let's say in the United States, how do I get that information out that's in our intranet? You wouldn't want like Twitter news getting any kind of like, you wouldn't want like somebody at home going, yeah, my husband or my wife is this and she knows this, blabbing. I think in a full-scale war like that, like this is not Iraq, right? We're not really worried about what Iraq does in a war with Iraq. But with China and Russia specifically, you probably want to limit new content. Is that what it is? The AT&T building, isn't it? Oh, the cable building is at the Manchester, California, and Mendocino County. Well, that's what I was thinking about was the satellite internet, Winky. So I'm like, yeah, with the that's what my thought is, Wink, is that if we had our intranet here, you would still have leakage. This isn't permanent. People think you can't do that. Well, we did it during COVID, right? Some of you guys know this. How fast did we shut down the country? When we wanted to. How fast was it? It was pretty fucking fast, right? It's pretty fucking fast. So to say like, yeah, we can't shut down the internet in the United States, I'll fucking tell you what. There's a button. There is definitely a button. There's definitely a button to shut it off. And then if they turn it back on, they could say, yeah, it's all content. Like anything that's already been said is good to go. And we're going to limit who can post. So they could go right to YouTube and say, all these people are trusted. They could say, and you already see these companies, right? CNBC, CNN have YouTube channels. You see Twitter with verified channels. You could see words be used, or you could just be warned by the U.S. government to say, if you talk about this or talk about that, you'll get cut off, right? And they could just blanket block you, and you'd have to go through a process to be able to get back on the internet and talk. So yeah, you see us null route their IP addresses in DNS. It's that easy, huh? Yeah, I would assume that they know about it. But I do think it's fascinating, and I think it'd be quick. You're talking about a war that probably lasts, I don't know, a couple months maybe max. 1 month, 2 weeks, a month. Yeah, I like the idea of the intranet. I like the idea of having like a U.S. internet. And then just rules like, okay, we shut it off. Here are your rules until further notice. Oh, don't forget, we're going to give you what is it called? UBI. You'll get universal basic income for the next few weeks. You'll see, I would assume you'd see price controls, probably see price controls, wage controls, and you'd see anybody that doesn't have a job. And you possibly would see FEMA camps be open to dispersed cities. That would be the only other aspect that I would think of.
So we're now 5 minutes away from the top of the hour and the release of the FOMC meeting minutes for the March meeting. Keep in mind also to get the US federal budget balance has a forecast of minus 314 billion on the prior of minus 262 billion.
5
I'll
minutes
be leading with the
until
FOMC
the
meeting
minutes.
at the top of the hour.
If you're watching us on YouTube, you want to go down to the preferences. You might want to refresh your screen. You're watching liquidity leave the market currently. You also want to refresh your browser, possibly. Another thing that you could do is hit the settings cogwheel, click settings on YouTube, and speed up the broadcast by ×2. My voice will sound like a clown, like I normally am on FinTwit, and then my voice will get normal again, so you only have a few second delay. If you're on Twitch, there's an option for you to make it real time, only a second delay. But otherwise, Twitch is the fastest way to follow along. I appreciate you all showing up today. I think you have my general gist and idea here on what's going to take place. You're seeing some weakness into the release of the minutes. If there's anything not unexpected, we should see vol come off the market. The market is positioned for a trade higher. We have a large concentration of calls on the market. That does make me kind of scared here into a point where they're going to want to sell any kind of move higher that we get. If there's any move into these higher numbers, 411.80, 412.23, 413.25, you'd see some aggressive selling coming into the market. If we do trade underneath the hourly trigger and hold underneath the hourly trigger and break below this low down here at this implied move, I'd be concerned that we're going to start to make some much larger moves down below. So be conscious of this implied move. You would want to, if you're a bear, you want to see the bloodbath underneath the hourly, and then get underneath the implied move, and then a bunch of put buying to take us to lower lows. If you're bearish here, if you're a bull here, I'm going to look for a subdued day. I'm not looking for much more than squeeze higher, maybe to 412, possibly get up in here. But I'm going to be looking for sellers to enter the market above here, above over here at some point today. If you're a bull, I would really have liked to have seen a put heavy options chain today. That's like the sweet setup. And we'll listen in to hear what the minutes are here in just a moment. Two minutes left. Thanks for joining me today. Maggie, how are you doing? Hold on, let me put your microphone on. How are you doing, Maggie? We going up or down?
I think that we are going sky high.
Oh, you're a bull, just like your daddy, huh?
Yep.
We're going to get in so much trouble for having her here with me.
1 minute remaining. I'll be leading with the release of the FOMC meeting minutes.
Let's see what this face look like.
Your mom is going to be so mad. I love you. How was lunch today?
Amazing.
It's pretty bad.
Ten seconds.
Got 10 seconds. Are you gonna
Just seeing
talk in the
Fed
chat?
minutes here, participants noted tightening credit conditions was likely to weigh on demand, which could help reduce inflationary pressures. Participants agreed that the banking system remained sound and resilient. So, Fed minutes say participants generally saw inflation risks weighted to the upside, and participants noted tightening credit conditions likely weighing on demand, which could help reduce the inflationary pressures. So, participants also commented that the banking sector developments were likely to result in tighter credit conditions and weigh on activity, hiring, and inflation as well. Noted that tightening credit conditions are likely weighing on demand. Participants assessed the labor demand as substantially exceeding supply, generally saw inflation risks weighted to the upside. Several participants noted wage growth was still very well above rates consistent with 2% inflation, and assessed labor demand again as substantially exceeding supply.
Watching for an initial reaction here off of these
So several
minutes.
participants noted regional and community banks as providing a critical financial service to many communities and industries. So the Fed staff also projected a mild recession starting later in 2023, noting all Fed officials backed the 25 basis point rate increase at the March FOMC. Many Fed officials lowered their views of the peak rates on bank strains, and several Fed officials stressed the need for policy flexibility.
Initial down move reaction in the market. Unemployment right now expected to continue at a high rate of unemployment. Participants at the Fed's March 21st, 22nd meeting kept interest rate projections unchanged for December despite banking sector stresses. That lends itself to us increasing rates, continuing to increase rates into the end of 2023. Prior to the banking crisis, many participants thought that the appropriate policy path was slightly higher than in December. Fed staff projecting a mild recession. So not full recession, just mild. So prior to this meeting, the Fed thought that the projected rate path would be higher, although they do see more rate hikes, not to the extent that they once did. That goes against fighting inflation, right? Many Fed officials lowered their views of the rate peak following the bank strains.
Meeting shows several policymakers considered a rate pause.
What's this about rate pause? Several Fed officials stressed the need for policy flexibility and the possibility to pause rates at any time. So the aggressive stance of the Fed is now telegraphing that they're not as aggressive in their rate hike policy for the rest of 2023. They need more flexibility with discussion about possible pausing of rates. Flexibility as well as a key term here, a key word. And that their target rate is not as high as it once was for 2023. Several officials considered whether to pause at the March FOMC.
Also seeing comments from IEA's Executive Director, Birrell, says global fossil fuel consumption could peak earlier than late 2020s.
A muted response right now in the S&P 500. Looking for this event volatility to roll off the market. Still have not seen it. VIX trading down to right now currently sitting at 1839. 1828 is where it gets bought. Several participants mentioned that they were debating whether it would be appropriate to keep rates unchanged at this meeting. Short-term interest rates futures up slightly after minutes of Fed's March meeting show several policymakers considered a rate pause.
ECB's Villa are due to be speaking in Washington.
I love that, Haggerty. The Yellownator hasn't even pulled out her big dominatrix cat of nine tails whip of pain yet. The pain will only be transitory. So you probably call this most definitely not a hawkish minutes, bordering on neutral to tempting. No, I wouldn't call it dovishness, but some dovishness. At least it's what we've been talking about, right? The discussion of the pause. And I think this morning we were talking to, I said, yeah, you'll see a discussion of a pause.
We posted the full meeting minutes for the FOMC's March meeting on the feed now for those interested.
A slowing of rates,
several participants
increases.
They were debating whether it would be appropriate to keep rates unchanged at the March meeting. Also, many Fed officials lowered their views on the peak rate following the banking strains.
The rate of pace of rate increases.
The Fed staff do project a mild recession starting later this year. And also, for those interested, we've put out the US federal budget balance report for March of 2023. So that did come in lower than expected at minus 378 billion, on the forecast minus 314 billion.
Yeah, that's the thing, John, is that that's the thing is like the pace of rate hikes was to stay on track, right? Stay on track. That was the contract with America, right? The contract with the stock market, the contract with the bond market, blah, 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 blah. And that contract's been broken at this point. Yeah, I agree with that, John, 100%. Subdued reaction so far to the Fed minutes.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
The VIX being bought on its bottom right now. The VIX dip was bought at 1832, now trading up into its 1 minute here. You may not even see any kind of a rip higher here, and this just be the beginning of a roll in the market into the close. Kind of boring if you ask me. Looks like intraday trading. Let's bring up the VIX real quick for you so you can see it here. This is a 1 minute chart on the VIX. $30-minute chart right here. It's just been trading, just consolidate, 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 consolidate. Bears looking for this nice, big, huge move higher. Bulls, not much room for bulls to trade lower here. Bulls want to see 1706. That's where you really get your squeeze up into 415, 430. Without that, you're going to see that sideways action. And that's what we've been seeing the past couple weeks here, is just that sideways action, right? Sell the VIX, buy the VIX, sell the VIX, buy the VIX. More of the same. Yeah, I don't even know. I mean, I'll be honest with you. I don't even know. I'll be honest with you. Let's say, even if we sell down off of here, I'm not seeing like the bloodbath that everybody's looking for. I'm seeing the dip getting bought, to be honest with you. I'm looking for that event vol to come off. Still hasn't come off. Still waiting. Unusual on a Fed minute day. Came in this morning and we looked at the options market. Options market was priced to 412.08 on the upside. Downside was 408.48. We hit in the cash market the implied move down below. Still no tag of the implied move on the high. I guess you could kind of say we hit it up here. Kind of say. The one thing bulls have going for them here is the pre-market high has not been tested yet on the upside. But I'm going to tell you, man, even the way this options market is priced here, it doesn't look like moon time either. It looks like they'll try to step in again and sell this above, and whatever downside move we get, more than likely gets bought. You'll see this bottom here get bought as well. So I'm still waiting here to see. I'm hoping that this vol comes off the market here before end of the day today, and then I can take a put position into tomorrow and Friday. Strange moves right now. No. This is not to tear apart short-dated speculation. This is how the market is right now. It's generally speaking like this right now. Is the white paper on the Discord? People have it on the Discord. People have it. You can just ask around for it. You're short? Yeah, I'm not short. I'm long calls here. I'm long calls here. I want to see the vol come off the market, and then I'll take a put position if I can. I want to take one
just as a heads up, we're
Somewhere in
expecting
here,
growth
somewhere in here.
SUVs Villeroy from anywhere from now.
Hedge, 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 hedge. Take the hedge off. Take the fucking hedge off into the bell. Rehedge up higher. Sell side's like, must sell, must sell, must sell. All things must sell, must sell. Sell side's like, sell all rips, sell them all. I'm like, you guys, I think it's if you're sell side listening in right now, you know that you're not gonna sell until we get into the close. You ain't get no news there that's sell side. Let's let it rip for a little while. Let's let it rip and then take a better position. I am max full port short. Never taking it off. Just to let you know, tomorrow we do have volatility at 8:30 in the morning. We have initial claims, continuing claims, Philly Fed, existing home sales, and existing home sales leading economic indicators at 10. But let's be real, tomorrow's vol is at 8:30 in the morning. If you're looking to capture that vol, you're more than likely looking to capture it on a high here. I guess if you're just a bear, you're just like, fuck it, I'm full short right now. That's right. That's right, Matt Ryan. How you doing, brother? You know they're gonna take they're gonna take the hedge off for a minute. They have to, dude. It's like, come on with the drama. The shitty part, Matt, is that the options market's not really priced too much higher from here. Kind of range bound. How you doing, Matt? Good to see you, brother. Yeah, that's right. Start printing my shit. Yeah, Matt. We were talking about this earlier, brother. That like the market's not positioned for like huge moves today. I'm like, I think I'm trying to, I think I'm trying to capture like this one move higher, and then come in with some puts into tomorrow. So I'm just waiting for these fucking. Oh, sorry, I should be swearing. No swearing. Beep. I'm waiting for these. I'm waiting for sell side to give it up here and reposition for a move lower on vol tomorrow. Can I check Tesla? Yeah, I can check Tesla. It's not looking good for where the VIX is. We're again trading to where VIX gets bought. For us to go up a ton more here, you're going to need VIX to start collapsing in on itself. If you reprice the VIX down to $17 or so, man, that's juicy to sell, isn't it? Juicy to sell the market up there. If we start trading below, like we're at 18.29 on VIX right now. You start pre-pricing VIX at like $17 or something, man. Everybody's gonna get short. Yeah, so Lord Penta, we checked the low on the green box, right? So you're still looking. You got the yellow box the first time up there. So what are you looking for now? You've got a cluster here saying that whatever squeeze we get is going to roll the market over. Whatever squeeze is in here, likely going to get rolled into tomorrow, brother. Just boring. So you got VIX right here. They're trying to buy this and not allow the VIX to trade below 1827 or so. Let's see bears or VIX bulls trying to hold on here to roll over the S&P 500. But even if you do roll the S&P 500 over, how low does it go? It doesn't look like it's going to go that low. Got the initial trade up to the yellow box, right? No break above. No confirmation trade for the second trade higher. Tesla now coming down to test its low. Second part of your trade. You got your first part of your trade on Tesla. You got this part of your trade. The next entry for your trade, you got no confirmation on this entry for your trade. So they're going to try to roll Tesla lower here.
IEA's bureau says that global oil markets to see tightness in the second half of 2023 and could push oil prices higher. ECB's Villeroy says core inflation is still strong and proving sticky.
$320 before 420. I don't think so. Well, as long as I'll give you this. So Foresight Finance is saying $320 before 420. If we stay in trend, I disagree with you.
This stream is sponsored
I'll
by
say
To The
this.
Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
If S&P 500 stays on its daily trend, we will see 420 before 320.
ECB's Villeroy
Only
says
if
they
trend
could
breaks
become more broad-based.
do I agree with that statement. Only
The
if trend
IEA's
breaks. Only
bureau
when
says
trend
oil
breaks
could
do
go
I agree with
above
that statement.
$85 in the second half of 2023.
And even then, it would. I was talking about it with Winky the other day on the phone, and I was like, if we do break trend, you likely wouldn't see 320 now. You would see it. It would take into like summer. You'd have an initial low probably off of that mid-May sell in May, and then it would continue into that. You'd get another rip, and then you'd see it into summertime, that 320, or possibly even fall it would take. Could take some time to actually get there. I don't see it like the third week of May. I don't.
ECB's Villeroy says inflation has become potentially more persistent.
So I guess my point there would
It
be,
says inflation has become
as long as daily
potentially
trend
persistent
stays
as repeated
stays
last
in the
headline.
direction.
So IEA's bureau says that OPEC Plus cut
Whoa.
was a bad surprise for the economy.
It's like a three-legged trade, right? Here, we'll do it in SPX. I'll try to do it. Hold on,
ECB's Villeroy says the ECB in more open phase after the steep rate hikes.
It would be like a three-part trade. You have, it's like, as a bear, you have the trade from trend, breaking trend, getting some weakness in the market finally right here.
ECB's Villeroy says core inflation turnaround should trigger stable rates.
You have like the trend trade, then you have the trend down to 360, 370 trade, then you have the break of 360, 370 trade, 72 or something like that, down to 320. I think it takes time for that trade. But I don't think that trade is good or valid until you break the daily trend. Or at least that's what the Elliott waivers say.
ECB's Villeroy says we still have a little way to go with rate hikes, but too early to discuss the size of the March move.
Trading down to the hourly trigger right now.
ECB's Villeroy says the ECB may possibly raise rates more at the next meetings.
VIX with a nice dip buy down below on 1824, trading up to 1861 currently.
Future decisions. And ECB Villeroy says the ECB already completed most of its rate hiking journey. ECB's Villeroy says it's premature to decide whether the ECB are to hike in May.
Bring over the VIX one more time so you can see it. Dip buy on the VIX where it has been bought, and previous examples. VIX being bought here, VIX being bought here, VIX being bought here and here as well. Usually short-lived. You'll see dip buyers coming back in again above at 1940. I guess this is the market crash. Yeah, I don't see much more than this implied move. I really don't. It's the same as usual. It's the same as it's been this whole entire week. It's been going back. We've been doing this for how long now? I think we're doing this since where are we at? The 29th. 29th of March. The last 13 days. Last 13 days. Literally like 13 days. Buy the dip, sell the rip. Buy the dip, sell the rip. No changes. VIX coming into close to resistance now. $18.98 is the target for VIX. Almost there. Pain almost over here for just a moment. VIX almost there. Remember the implied move down below, target down below 408.24 for a retest of the previous low, maybe a break for a new low. Here's the VIX in the background right now. Squeezing up from that dip by down below up to 18.95, 18.99. We'll see if there's a rejection here.
NYMEX WTI crude May futures settle at $83.26 a barrel.
VIX coming into its hourly trigger right now at this moment.
NYMEX gasoline May futures settle at $2.87 a gallon. So back to crude there. So that's up $1.73 a barrel, or 2.12%.
Reversal bar currently on the VIX. Quick reversal on the VIX.
NYMEX diesel May futures
18.96
cents a gallon.
Should get more blood here. Probably not done going down. Even if we get a squeeze higher here, I'm watching a 3-trigger cluster. Still want to look for this move down here. For 10.52. A 1-minute chart right now. There's the bear cross right there, above at 410.83. Previous low 408.24. Just waiting for some consolidation here. Wait, the 1 and 5 minute are coming up. We should see a blast lower here. Look for 407.67. 408Ps are good too.
And NYMEX natural gas May futures settle at $2.09.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Should see a nice blast down coming up in just a few moments.
WTI oil ends up 2.1%.
Here we go. It's going to start blasting right here. Next minute, next few bars, going to start to see a nice big bloodbath here.
Report.
Trying to break above the hourly trigger right now. 1 and 5 minute coming up underneath the hourly for a 3 trigger cluster. Come on, baby. Come on down. Previous low right here. Just a few more moments. I'll show you what I'm watching over here. Just right in here, just watching this VIX. This is a VIX right now. Just waiting for the 1 and 5 minute to catch back up here. 1 and 5 minutes to catch back up. And then hopefully get a nice squeeze higher here. Just a few more moments. A few more bars here. Just waiting for the 1 and 5 to catch back up.
G7 communique says we reaffirm the financial system is resilient and reiterate the determination to maintain economic and financial stability.
Almost there. 1 minute's crossing the 5 right now. Just waiting for the squeeze above the hourly trigger on the VIX here. I also have 406 flat down below here and S3 down below at 406.45. 405.67. The VIX about to squeeze higher. Oh, so much drama. Let's go. Time is right now 2:41. Gotta wait another hour for this to happen. VIX rolling over on the hourly right now. Should maybe squeeze here for a bit. 1 and 5 still coming up though. Roll this shit over. Don't take all day. Still waiting for the VIX for the 1 and 5 to come up on the VIX right now. Want to see the 5 and 1 minute continue higher and for price to continue here for the trade lower. God, this market moves so fucking slow sometimes. What did you say, Bear? Starting the car for next 2-week journey to hell? I don't know about that. I'm gonna assume this is over by 3:30. I'm hoping this is over by 3:30.
33 cents a barrel. It's up $1.72 or 2 spot 0.
Hoping this is over by 3:30. Like I buy a dip.
Total Energy CEO says Europe natural gas crisis not fully over.
Yeah, I'm waiting, Chase, I'm waiting for one more rollover down here, but I'm like, how long is this gonna take? An hour? 15 minutes or an hour? I don't know. I'd prefer it to be like 15 minutes. Put it right there. Yeah, I don't think you can get it down. The options market's not pricing in, Chase, that we go down that low, man. It's like the implied range the next week, dude, into April is tight trading range. It's not like Bloodbathville down to like 380 or something like that. Yeah, I'm hoping that we can get a roll down here so I can buy it. I want to buy this right here. Or anything. I'll buy that and I'll buy this. VIX is coming back. 1 in 5 minutes right underneath it. It's just a matter of time. It's like the next hour or so.
Total Energy CEO says Europe is set to pay more for natural gas.
It's just going to take a minute. You got to wait for the 1 in 5 minutes to come up to the hourly on VIX. Come on, VIX, break through the hourly. Almost there. There goes VIX. VIX now making its third attempt to break the hourly right now. 1 minute's coming up to help right now. If it can't break this hourly, it's going to be another half an hour to an hour. They really need it right now to break with the 1 minute helping. We'll see if the 1 minute can do this or not. Come on, VIX, baby. Give me a bloodbath. Well, relatively speaking, give me a bloodbath. I'm like, give me a bloodbath for 10 points. VIX now trading higher than its hourly trigger here, becoming extremely bearish. Look out below. VIX now trading 1904. Looking to see price follow here in just a few moments on SPY. Be aware that the options market is not priced for major moves that you're expecting. VIX now trading above its hourly trigger. It's got the 1 and the 5. It's on a cluster here, bearish cluster for S&P 500. Looking for lower lows right now. Implied move in the day is not too much. 408.24. Bears really want to see rolling puts coming into the market for a massive extension lower. VIX now trading $19.10. Dip buyers above have stepped in. So market dip buyers, should be expected here to step in. Jeez. with the VIX somewhere around $19 and a half, $19.50. Sorry. I'm answering. I'm being asked questions via text message, so I'm trying to give answers on text message right now. I apologize for that. I got a bunch of texts coming through, and I have to answer questions. Production notes for tomorrow's stream. No, it's all production stuff for tomorrow's stream. Yeah, still no new low right now. VIX right now is needing. So let me show you guys in the background here. Hang tight here. This is the 1 minute chart on the VIX. So what this takes here, what we need to see here for, there's a few things for you to see here. So the range has been defined, right? Let me see if I can mute like my camera here. Hang tight here. Where's that? Where's that frame? Okay, cool. So you can't see my picture anymore. So this is a 1 minute chart right here, right? You're watching bears step in, bulls step in, 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 bears, bulls, right? Kind of getting the drift here. Overall, we're bullish on the market as of right now because this daily, right, keeps coming down. The expectation here is that this is going to continue to push VIX down. That's the expectation, at least. Now you're seeing the VIX get bought right here at 222, right? So what the bears need to do to get this last capitulation move up here higher to try to tag this 1950 is they need the price to stay. Number one, price not to reject off the hourly, price to stay above the 1 and 5 minute here, and for this to come underneath here, and this red one to come up here. I don't know what that is there. It's not really working, is it? Hold on here. For the 1 and 5 minute to get underneath. And you need VIX price to get up to get that new low. If we can't have this this doesn't happen, we start bouncing around in here. What ends up happening is you're doing this kind of nonsense here, right? And the SPY's trading sideways into this close. So bears need this price to get up here to get that new low in the market is the point that I'm trying to make to here. And you also have the cluster forming here, at least. All this consolidation translates into so I was like, it's going to take 15 minutes. Half an hour is going to take an hour for that move down into the bell here when I want it to happen right away. The other issue here is that the options market is not priced in. The options market is not priced in right now for more than trading this zone. Does that make sense? If we had an implied move that was down below at 406, something like that, 404, something like that, I'm expecting more bloodbath, or at least like 30, 40, 50 points. So probably the best that you'd expect into this bell would be some kind of selling into the bell, and then maybe you get a squeeze down below to this 405 into this close. So what happens here is you end up just sitting here waiting for this trade to work itself out or play itself out. So I'm over here working on getting back to some people on some text messages. Hold on, let me bring this back up here. Where's that? There's the frame. There we go. All right, so it's 3 o'clock. What we're going to do is we're going to start to chart out some of these XLF tickers as we wait for end of day. Expectation here in end of day is that we sell off into this close. So just so you know, into the close, looking for the market to sell off. My expectation here is not too high without that sell-off. I'm not expecting the VIX to reprice to $17. You would need news for the market to reprice to $17. What the VIX currently is sitting at is 1883. I'd like to see the VIX for the market to truly move higher, to go to at least 1940, something like that. Outside of that, the trading range is tight right now in the S&P 500. You've noticed that this whole entire week. So I've been trading, even though I'm not streaming with you every day. And the moves are not as violent or with follow-through as you would expect. So even if let's say you're like, hey, we're going to go up here, where to is the question. If you think we're going to 415 or something like that, I guess you're expecting a repricing of the VIX down to $17. Otherwise, it's ping pong and looking for a low to buy to go higher here. So we'll take a look at XLF and some of the underlying tickers into this close. We're also going to look into Thursday and Friday real quick so you can see the expected moves for the week, see where we expect to end the week. So this is the 1 week implied move on SPX, or this is on SPY at least. You've got for today, you've got 410.20, 407.87, 413, 411, that's 412, 406.11, and then 414, 412, 65, 405.04. Range expansion, though, we see into the 17th, 18th, 19th, and into... Here, let's go to the 1 month here. Start to see this range expansion into May 5th. Now, we've talked about that first week. That's that 420 and 396. So even with the implied move, and this is only as good as where the price is, right? But even with this move higher into the 5th, I think someone was saying 415 on Friday was the implied move. Upside into the 5th of May is 420. So if you had that bullish view of, yeah, we can get to 420, possibly 430, if price starts to climb higher, and then on the downside, 396, maybe 387 into mid-May if we start to really sell this market down. So range expansion expected into the first week of May. Sellers stepping in at 413.75. Still no price, still no tag of 415 on the weekly expected move. Hold on a second here. Come on back here. You can see balance down below at S3. All these buyers stepping in down here. You can see them, right? Buy. Trading down again right now into where these buyers, these known buyers are. Bulls trying to create support, an area of balance here. Wednesday, Thursday, Friday. This weekly expected move right now, I'm looking at the 14th, 404.95. It's already been tagged. So this 404 has already been tagged in the weekly expected move. The upside has not been tagged in cash market into Friday. $410, $411. So what am I looking to buy down here? Somewhere down in this S3, if we can even get this. You get that sneaky Pete kind of a move down here? Any kind of a sneaky Pete, you've got all kinds of vol into tomorrow, looking for a trade up into this 412, 414 into the weekend. But even then, you're talking about a tight range, right? Not a ton of movement in here. If you're a bear, you really, for you to start getting gnarly, here's the daily trigger down below. This is where bulls want to buy but haven't been able to buy any of this daily trigger down here. So you're still even bullish if we trade down to this daily trigger. It's just another opportunity for bulls to buy, whether it's here,
In just under 10 minutes' time now, we're expecting to hear comments from Bank of England's Governor Bailey.
whether it's here, no rest for the Bears. Not just none. You're talking about the sideways trade and up continuing on into end of month. So for this point right now, any kind of a place to buy down below is a gift to bulls. Any kind of a buy at 405, 406. Any kind of a buy down at the daily trigger at 402, 403 is, again, just another dip buying opportunity. We have not hit the upper zone or the upper range for the weekly expected move. So even into Friday, I would expect the VIX to sell off. That's right down here, 402.50. Daily still showing itself bullish on XLF here. The hourly is weak on XLF. Daily is bullish, though. It's at the bottom of its bearishness. You can see it back over here. Still bearish, but not quite where it can be. And you can see the zero line right in here. Still bearish, but on the back end of bearishness for XLF. There you do see these sellers above at 32.59. Came back in again today on the 12th and sold at 2 o'clock this afternoon. Teed off on that daily move. Currently, XLF is trying to hold itself on its hourly trigger. We're going to look at a larger time frame here on XLF to see if it can go higher. And you can see in this daily as well, you can see the curve is heading to the upside. So just in here, you're looking for these bars to become higher, right? Or at least on a daily basis, to at least get bullish into ER season. Now, with that said, this is the hourly velocity here. This is turning bearish on the meantime, right? So end of today, you might see some more bearishness in XLF. You're just looking for another opportunity currently as a bull to buy a dip down below here. Whether that dip is at 30.89, 31.50, somewhere down in here, 31.67. It's just so far a consolidation phase. Maybe next time.
At 3:15 p.m., we're expecting comments from Bank of England's Governor Bailey.
For another move higher to try to tag $34. $34, and then to close the gap above at 35.88. Yeah, I'd probably take 34.80 if I could on XLF. Market's starting to bleed down lower now. Nice to see. Nice to see. Oh, yeah, baby. Give me that low down below. All right, so we did XLF. What's the next one that you want me to do? Start rattling off your tickers. We better not be fucking done going down right now. Let me go back and look at VIX real quick. Yeah, it's doing good. VIX, we're not done going down yet. We're not done going down. 1 minute's coming up to the hourly right now. 5 minutes coming up into the hourly. We're not done going down yet. We're not done. We ain't done here yet. We ain't done going down just yet. So VIX, or not VIX, XLF. You're looking to buy a dip still on XLF. So if you're looking for entry into XLF, some good places. 3208. 3089, somewhere in there. Anything you can catch down there. It looks like consolidation to move higher. Still trying to close that gap on high. Overall, though, bullish on XLF. From the side of from the daily, bullish. Just keep on coming down, Spy. We're not done yet. We need to get the VIX up there for a run. Can't be trying to tell me we're gonna like when I say reprice the VIX, it's a joke. Oh, I think we do reprice the VIX. I just think it's a slow repricing the VIX. It's not like today. VIX is going to $14. New low of the day. What's the next ticker that you've got? No. I want bank tickers. Give me bank tickers. Bank tickers. You guys chat so fast sometimes I can't read. Here we go. Winky's got a couple. BAC and MS. Man, BAC and MS. This is probably good we're looking through these right now, Binky, because
So we are just shortly expecting comments from Bank of England's Governor Bailey.
BAC, Winky looks like it's gonna rip some faces off, man. BAC, Winky. I mean, not today, but it's juicy, bro. It's actually a good one to look at. SPY now trading 407.99, 408. Give me some blood into this close, please. Winky, you gonna just move over to that BAC chart for you because it's juicy. All right, hold on a second. I gotta sell this shit. Hold on. I gotta keep my eyes open here. I gotta fucking pay attention. We'll get back to bank stocks. Hold on here. But we're going back to BAC. BAC is juicy for a squeeze. Hold on. BAC, MS, TD. XP, FRC. Okay, hold on. WFC, PNC, SoFi, Schwab, fucking JPM. All right. Hold on. You guys got a shit ton of you guys are fucking listing off every goddamn bank. Oh, sorry, I shouldn't be swearing. You guys are listing off every bank we have in the system right now. I got to look at the VIX really quick here. Yeah, we're almost there. We're getting close. We're getting real close. We're going to be really close here, so all right. Just keep your eyes on remember that yellow line I was telling you about up here? It's getting crispy. 1940 up there, 1940. Take some money off up here. All right, I'm taking some money off. Be careful in here if you're a bear. There's more room to trade lower here. There's more down to go. I'd really like to see. I'll show you what I'd like to see. Hold on. I'd like to see something like that into the bell. Something like that if possible. I want to see the break of S2. And then I want to see the break of the key point here is I want to see the break of S2. And then some kind of rejection. Where is that at? There's work that needs done here. I'll show it to you better on VIX real quick. Just right here. I want to see if this is price here. But I want to see like this red line come up. I'm not changing colors for you guys. You guys have fucking pay with the colors. I want to see this stuff like come up, consolidation, and that final rip up into this 1940 up in here. So how does that translate is to me how that translates is break S2, come back up one more time, and then you get the last leg down here into the bell. Okay, we're going to look at BAC though. BAC is really cool. So there you go. Jump back in if you want up here somewhere. This previous low turn into a resistance. So for your traditional charters, come on now. Traditional charters to get some kind of resistance up here. Does that make sense? BAC is a good one for us to look at though. BAC is really good. You guys got all that? I can get off this chart right now for a moment, right? All right. So BAC. No. Let's look at BAC. This is a 30-minute chart on BAC. I really like this. I really like no. There we go. So follow my cursor, okay?
Bank of England's Governor Bailey says the banking crisis testing institution
Pretend right now we're on this shitty low down here, okay? Pretend you didn't see any of this right here. But do you see how that... Ooh. Pretend you didn't see any of this right now, okay? And pretend all you're seeing is price on this low down here, and you see how... Pretend we can't see this.
This stream is sponsored
Pretend
by
this isn't
Tick.
here.
Get free daily pivot
See that
points,
yellow line, though?
Fibonacci, and market
See that
profile
orange line?
levels
See that blue
by
line?
signing up at
Do you see how we're putting in a low on negative velocity to the downside? You see how we're putting in a low to negative velocity to the downside? See this right here?
Due to crisis.
You following so far? So the idea here is that no matter what price is telling you right now. Oh, dude, give me a yellow. Give me a fucking yellow. What you're going to expect is these yellow bars to come up eventually. Does that make sense? And velocity to rotate to the upside. So even though price is like, yeah, we're going low, bro, we're super bearish. Truth is that when we start to move here, starts to signal a bottoming and a rip higher. Does that make sense? Same thing right here. See that? And then we start to rip higher, start to rip higher. So same thing, you're going to have that same expectation that price is going to rip higher here. So I like BAC right now. It's a good place to buy a dip down in here. Probably a retest down below at 26.14. But any kind of buying down here, I'm happy with. I'm not seeing anything. I'm not seeing anything per se. Any kind of like market risk danger for BAC. Let me see if I got. Sing it for daddy. Sing it for daddy. Sing it for daddy. Let me hold on here. Let me load another chart here. Let me load another chart for you for BAC. Unnamed. Nope, not that one. Nope. BAC. As far as higher time frames on BAC, like can BAC on a higher time frame, reject up here and go lower? As far as a higher time frame, it doesn't look like it. This looks like the bottom for BAC. You see this white block down here? We're on the real negative side or bearishness of BAC is my point here. Coming up on a higher time frame here, So just BAC in general, I'm not seeing the death and destruction of BAC. I'm looking at this like this is a dip to buy on. It's a great example of buy the dip. Nice weekly or monthly, or not weekly, but a nice monthly dip buy for BAC here. I like the ticker. Good job on picking BAC. So even though on like an intraday, you're seeing bearishness here, right? On an intraday, it's another opportunity for a bull to buy a dip on banking down here. So just consider this to be a blessing of some kind to you. Mr. Juarez, thanks for tipping, brother. There's inside the description of the videos. There is a direct link to tip me directly. Otherwise, it goes through some weird shit. Like, I don't know, like Twitch is like, we'll give it to you in 3 months or 2 months or something. YouTube's like, we're keeping a third of it. We're going to give a third of it to PayPal, and we're going to give you a quarter of it, and you're going to get taxed on it. Let me see if I can find it. There's a, yeah, hey, Mr. Warriors, thanks, brother, for supporting the channel. I appreciate that. There's in the description of the video on YouTube. I'll try to find one right now. Hold on. There's like a direct way to support the
Bank of
stream.
England's Governor Bailey says bankers.
Oh, that's Streamlabs. Right here. Here you go.
Easing is crucial for stability.
Here's how you directly support the stream. I appreciate it. Hold on here. Thanks, man. Here's one for you. Man, there's one for you. Oh, yeah, there goes that new low on S2 right there, baby. There goes that S2 right there. You guys want to put it to the side so you can see it? Maybe that helps. So bank stocks, opportunity to buy a dip. Only thing I can say to you on that, in terms of does BAC or banking stocks go up? Velocity on a weekly, monthly, and 3-month period says it's only fucking going up. It's not showing. It's not showing like declining velocity with price being up right now, Winky. BAC is a good one to look at, man. We'll look at MS next. You guys want that fatter so you can see it? Yeah, it's good down. I can not have a crystal ball, but what it's saying is it's a good place to buy a dip. It doesn't mean we don't go down $1 or $2, but you buy it, you just don't look at it until you get into earnings season or its earnings. Nothing is saying be careful of that. Sometimes when we sell, as you know, sometimes when we sell off into earnings, you'll have that last moment capitulation move down. I'm not seeing that right now in BAC. That's my one fear on the banking ERs. If I had one fear, it's you'll have like the 7 to 9 trading sessions up into their ER. I feel like that's its own trade.
Video to Bank of England's Bailey on the newsfeed for those of you that are interested.
And then what I'd never like to see is, let's say you're buying the dips in the BAC, and then the 7 to 9 sessions up into it. We trade up into it, let's say. And then there's either like that one moment where they rip and they take profit before we get to the open, and then they restart the trade, or we get that last capitulation move down.
Tightening very carefully. We do not want to have its detrimental impact on the markets.
And you're positioned improperly. So I would say to you, if you're owning the underlying, I think that's the safest trade. Or you trade it up into earnings, take the money and run, and then look for a new rebuy the day after, the morning after, something like that. And it kind of like tamps down the risk in financials.
So apologies there. So Bank of England's Governor Bailey says we are not seeing any concerning signs in the markets due to quantitative tightening.
What are they laughing about in the background right now? You hear him giggling in the background?
Early market on close imbalance, 538 million to the sell side.
You hear him giggling, Maggie? Next one. Okay, so BAC was a good one. I'll look at MS. Think Teddy. Look at MS. I'm really looking for someone.
Bailey says, I do not see any makings of a repeat of 2007 to 2008 crisis.
Another good dip buy on Morgan Stanley.
Bank of England's Governor Bailey says we will stop quantitative tightening if it causes stability issues.
So ready? See this yellow thing right here? You see the overlay right now? You see the overlay on it right there? Here, here, here. I'm looking for that last trade lower into the bell here. You guys watching this here? He's probably just looking at his puts. Morgan Stanley. Not so sure on Morgan Stanley. How about this? Mark my words on this one, okay, Winky? Let's go back and revisit this because I'm going to give a not as positive outlook on Morgan Stanley. So I've got a better outlook on that's the daily. Oh wait a minute, that's the daily chart. Hold on a second here. 30-minute chart is what I'm looking for. Okay, ready? Somebody keep track of my someone out there keep track of what I'm saying about these bank stocks, okay? They're gonna get complicated. I'm bullish on Morgan Stanley into their how about this? I'm bullish on Bank of America into their earnings, and I'm bullish after their earnings. Morgan Stanley, I'm bullish into their earnings. I'm not bullish after their earnings. I don't know if it happens the day after, but I am not bullish on Morgan Stanley. I don't know what they have coming their way. I'm not bullish on Morgan Stanley. I'm bearish on Morgan Stanley. I don't know if that means take the money and run after earnings and short them into summertime. They've got something wrong. I'm bearish on Morgan Stanley. I'm bullish for them joining a run into their earnings, but I'm bearish on them. Unlike Bank of America. Okay, surprised that I have that there, but that's what I've got. Two different takes on Bank of America and yeah, I'm bearish on Morgan Stanley. So just mark my words on it. I'm bearish on him. I'm bullish on Bank of America, but not on Morgan Stanley. I'll write that down for myself. Bearish. Bullish on the run-up. Bearish on both run-ups, but bearish on Morgan Stanley. Bullish on Bank of America. We'll look at FRC and Schwab next because I know those are the meme stonks.
Bank of England's Bailey says the credit default swap market is not a reliable measure of risk.
Squeezing higher now on the S&P 500.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
I see a lot of consolidation in FRC's future. FRC, I'm not going to show you their chart because it's kind of garbage. FRC is a tough one. Buy the dips, sell the rips, lots of consolidation. Let me talk. When's their ER? You're here for blood? There it is right there. We'll see if we get it into this close. Let me check the VIX and see if it's still valid or not. Yeah, it's coming along. It's coming along. We want to see VIX start squeezing up here. It's coming along. Not quite done here yet. One more try for the Bears. Let's take a look at it and bring the VIX up for you real quick. Price rolling over right now in the VIX. I'm still looking for, if this is pretend this is a red line, I'm looking for this. I'm looking for price to come down, retest the hourly, and then blast up higher into this bell. See if that still plays itself out right now. Yeah, I don't know. Yeah, the hourly is looking good. What time is it right now? 3:38? It might happen after the bell. We could squeeze up into this bell right now. It's possible we could squeeze up and then sell off into tomorrow morning and do something like this. Yeah, I'm actually bullish on I'm bullish on BAC. I'm not bullish on MS into their earnings. FRC is a weird one to look at right now in the background. It's not bearish, but it's not extremely bullish. If I were trading I haven't traded FRC in a few weeks. If I was to trade it in the next coming, I would personally prefer to trade FRC like a meme stock and with traditional charting methods, believe it or not. Just supply and demand zones. Like FRC can easily trade down to $12.32 like it's nobody's business. It's going to take a long time. I'll be honest with you. In my view, it's going to take a long time to try to. You're talking about the number of people trapped in FRC is probably extremely high. So FRC is a tough one to look at. Let me look at Schwab here.
Balance still sitting at 538 million to the sell side.
I should look at JPM next too. JPM's another good one to look at. This looks like mixed earnings for banking right now. 30-minute chart on Schwab. Is anything be gleaned here? Schwab, I'm bullish on. I'm bullish on Schwab. I'm bullish on Schwab to 57.40 into their earnings. Yeah, I'm bullish on Schwab into their earnings and after their earnings. So where FRC would be a sideways trade, Schwab, I think, is going to have a good earnings and will trade up after their earnings as well. I'm bullish on Schwab. I'll show you MS right now. I'm going to show you why, Winky. It's 541. I want to do this for Winky right now. I'm going to do MS for you, Winky, so you can see the difference versus the strength in. No, that this isn't. I mean, I want to see what this. I want to see what this means too, Wink. So, so Schwab right now in a 30-minute time frame, right? I'm bullish here on Schwab. I like the idea of Schwab up into their earnings. Does that make sense? So I'm like bullish here on Schwab to like 87, 88, $89. I'm bullish here on Schwab.
Non-banks in a crisis.
Into their earnings. My problem with this trade up in here, I'll show you what my problem is here in just a minute. And that is on a higher time frame. So like into earnings for MS, I'm bullish. But over a longer time frame, it's not showing itself as bullish here. It's showing itself as the top of bullishness. So this right here is concerning. I don't like seeing this 3-month coming down. I don't like seeing this weakness coming down on a 1-month basis. So I think that anything up here is going to be met with selling down below. You know, so even if you come up here, even if you trade up to 92 or 93, if you can get a good earnings on it, I'm still seeing that weakness over time. Is my point here. Just higher time frames. So if you take the money and run on 92, 94, 88, something like that, I see more risk to the downside on MS over time. Unlike BAC, looks like it's going to make a comeback. So not as bullish on MS as I was on Bank of America. I just did an outlook on the next 2 days about a half an hour ago. Like to expect a dip buy on both of these places right here. See this yellow bar right here? And this yellow bar right here, that you buy this for a good close on Friday. We have vol tomorrow and I believe Friday morning, but I would expect to move higher into 412 by Friday. It's a good place to buy a dip down here. Good place to buy a dip here. Good place to buy a dip here with a call spread for Friday in the money. You can see it right here. These are your next 2 days right here. I expect dip buying into this Friday close here or up right down in here into this Friday close right here. No news that I can see that says that we start crashing or anything. My only concern down here is I want to see the VIX. I'd like to see the VIX get higher so that I can take that trade
into the sell side.
Up into Friday. Squeezing higher now on the SPY, trading 408.41. VIX coming in to check its hourly and 5-minute here. Please sell off into this bell. Please sell off into this bell. I want to buy some calls, but I don't want to buy them here. Probably going to miss this trade. $13 minutes left into the bell. This will leave me having to wait until tomorrow to put calls on. You want me to look up MasterCard next and yeah, I want to see this sell off into the bell down here. Tweezer? Oh yeah, you mean the tweezer reversal? Send it to the depths of hell. I didn't swear. Say it to Daddy. Say it for Daddy, Maggie. Hold on a second. Put your microphone on. Say, send it to the depths of hell.
Send it to the depths of hell.
Say it with conviction. Say, send it to. Say, make it a bloodbath.
Make it a bloodbath.
Oh, yeah. Oh, bloodbath into the bell right now. Oh, yeah. Give me that bloodbath, baby. Give me the blood into the bell. Give it to me the way I want it. Send it. It's the baby bubble blowers hangover, right? Eating too many sundaes, chocolate sundae hangover. This is what happens when bulls have too many chocolate sundaes, eating banana splits they can buy any dip they want. Give me blood into the bell, please. Roll it over. Send it down now, please. Get down there. Get down there so I can buy some calls on this bell to hold overnight.
Billion to the sell side, which are final orders to come through before we call it.
So the normal stream.
2.1 billion to the sell side. So that's market on closing.
So let me talk here
balance
for a minute here, but it
2.1
was
1 billion to sell.
So some of you guys on Twitch have only had me on Twitch for a short period of time. But I've been streaming on YouTube for a longer period of time. Haven't taken a week off in a long time. Haven't taken any vacations, nothing. And then this week specifically. So normally I stream 9:30 to 4 every day, or 9:30-ish. Sometimes I let the market open up in the morning and I have issues to get here, but basically it's all day long, Monday through Friday. This week specifically, I've got my daughter with me right now. This week specifically, I've had so we've got tax season. I have, hey, Maggie Doos, I have very complicated taxes and some in-person testing for my children at school that were kind of like dodging and weaving unexpectedly. So I apologize for not being here past few days. But generally speaking, I don't take vacations that frequently. They're very rare. Here, most market days are open. So you should expect me here days. You will see me on FinTwit say, hey, I'm not going to be here today, or I can't be here today. I'm going to take the day off today, something like that. So I do make notice on FinTwit. If you don't follow me on FinTwit, follow me on, make an account, follow me on, just Google search CaptainJimJames, and I will say something typically on FinTwit. Any other time that you don't see me on, it's because I live in a state that has horrible electricity. We sometimes lose power, stuff like that. But other than that kind of stuff, you see me on every day of the week. Oh, yeah. Give me that. Oh, come on. Keep reversing, dude. Stop playing drama, dude. Go down there. Stop with the drama. Go down to the depths of Hades, please. We already know that we got Vol tomorrow morning. Just send it down there now, dude. Send it down. Get down there for daddy. And go to the depths of Sunday hangovers. Yeah, man. Thanks, Dawson. Yeah, man. Just follow on FinTwit. And what? Yeah, I'm here most days of the week. I haven't taken any vacations, dude. Like a real, hey, I'm going to be off for a week. It's been a while. My wife's yelling at me right now about it, so even she's angry at me about it. Just send it down there, dude. Just give me a good dip by. Oh, I hate when they do this. They're like, okay, we're going to make you buy this. And I'm like, I don't want to buy this. I want to buy this down here. I want to buy this down here, please. Yeah, just go to search for me on Google. Just Google search CaptainJimJames, and my Twitter accounts will come up, and you can follow me there. There's a few things for you. A new follower. This is a completely user-supported community. So anyone that you interact with, this is a great group of people. They all do it free. We all do it free. We all work our butts off. We all put in many hours, our time and effort into this project. So just reach out to anybody in the chat. We also have a Discord that's very active, very strong group of traders, investors. And then we have a YouTube or a FinTwit community. I've got a handle that's private as well. It's at Captain's Alpha, and then the public FinTwit handle as well. What are you going to say? Oh, you want to say something? Hold on. Okay, hold on. Yeah, we're on the end of the day. Say something for Daddy.
This is for you, franchise. I saw this in the chat. I am the god of hellfire.
Who said that?
Franchise.
I am the god of hellfire. Franchise said that?
Yes. Go franchise.
Are you turning into a bear on Daddy?
Maybe.
She's going to the dark side. She's definitely going to say. She's definitely going to the dark side. She likes that stuff.
Is she so bullish? Oh, look what he's. James Kim said, "Cap, I want to give money, but YouTube won't let me."
Oh, YouTube won't let me. I don't know. Here, hold on here. Is that a link? Here we go. You can donate the link. Donate directly on that post right there. You just click on that one. You can donate. Oh yeah, we can get some bear tunes. I think we can get some bear tunes. Hold on. Oh, blood in the marketplace. Do we have blood in the marketplace right now? Oh, baby, into this close. What is happening? What is happening right now?
Robux. I'm trying.
Oh. 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 What's going on out there? Oh. Oh. Oh, yeah. What is happening into the closing bell here? We're getting a new low on the close at 3:56. 4 minutes left. Oh, yeah. What happened to the Bulls today? It's not really the Bulls' fault. The options market, we saw this morning, right? The options market's not really priced to see. Oh, we getting the buyers stepping in now finally. Trying to buy this close right here. Bulls trying to pull it together. Bear doom. Blood. Rain blood down into the bell. Rain it down into the bell. New low for the Bears here. I'm going to expect some weakness into tomorrow, Bulls. Can we get 2 more red bars? We got 3 minutes left. Give me like 3 big red bars to the depths of hell. Yeah, should I buy this dip here? Let's look at oh look at oh no, they're holding up the market right now. Dude, tomorrow's God damn it. Like tomorrow's dude, so the 13th has got 100 and so 412 C's, 162,000 calls. 14th. Now the 14th. Man, I'm telling you what, I think tomorrow's going to be a down day. I do. There ain't no way they're letting those 412s print tomorrow. Now we get a ton of puts on Friday. Man, tomorrow could be a sideways day. Just the way the options market is right now. All these 412 call buyers think we're going back to 412 tomorrow. I don't know. I don't know if that's actually happening here tomorrow. Beer dads are proud out there. My expectation for tomorrow is, I don't know. I don't know for tomorrow. I'm hoping for more down tomorrow now. I'm going to be thanks for super chat. My expectation is we're going to have more down tomorrow. We've got too many trap bulls for tomorrow. We're going to burn them all out by morning, I hope. And then we can come back and try to revisit that 412 on Friday. There's a ton of puts on Friday right now and not a ton of calls on Friday. Bear dads out there are like a tear coming down their eye right now. All right, so that's the day. I'll see you guys tomorrow. Maggie, you want to say goodbye to everybody? All right, say goodbye.
Goodbye, everybody, and vote in the comments if you want me to be here tomorrow.
Woohoo! All right, so I'll be
Bye,
seeing
everyone.
you. I'll be seeing you guys tomorrow. Wave, big waves. Hold on, you want to see a picture of her?
Here,
Don't tell her mom. Whatever you do, don't tell her mom.
So then.
Your mom told her mom. I was like, we're gonna hang out all day long. You want to wave? Look in the camera.
Hi.
Say have a great day, everybody.
Have a great day, everybody.
All right. Mainstream Live. So tomorrow, I don't think we're going to print 412 tomorrow. I don't think so. I don't think we print 412 tomorrow. I think that we'll print it on Friday, though. I am interested in that vol tomorrow morning. I'm not going to take a position into the close here. I would prefer to take a position on tomorrow's open. I'm hoping we can get a dip and hopefully trade lower. This is a tough thing to trade, man. Like, these trades right now are good for like 10, 20, not even 30 points, really, right? Even into today's market, we saw that We weren't priced to squeeze to like 415. We didn't even squeeze up to 412. We didn't get up there. It was just like, yeah, fuck it, we're gonna set. Oops, sorry. Make sure she's not watching. You know, it looks more, you know, you can just see it in the market right now that we're not priced to make these giant outsized moves. And the brutal part is VIX is the same way, right? You know, I'm looking at VIX right now to this close. It doesn't look bearish and it doesn't look bullish. It doesn't look either. It just kind of looks meh, like meh. Hey, yeah, you guys all have. I know I just did the earmuffs, man. I was like, dang it, I just swore again. I actually did good today. I think I can count on one or two hands how many times I've sworn when she's been in the room, so I'm doing better here.
Hello. Here. Look at something that.
Hold on, I'm still. Come on over here. Here we go. What do you got going on over there? Oh, look, they're talking to you in chat right now.
Look at what John Haggerty said.
Say hi.
Hi.
John Haggerty said, "Bring back Maggie with a high-powered electric cattle prod to apply the bulls." So hey guys, I'm gonna expect tomorrow to be sideways and down. That's the expectation. I don't see that squeeze unless we get a little bit lower here. So I'll check you guys out tomorrow. I'm going to expect down, man. If they buy futures right now, I'm going to expect a down move into the open tomorrow. So I'll see you guys tomorrow at 9:30 in the afternoon. Be here tomorrow.